months ago, I bought a Pokemon game for my Nintendo Switch, and that was going to be my way of like giving my time dump into this Pokemon game so that I'm not overcomplicating. So that when I do have the ability to be in the same room as like my computer, instead of like looking at my ledger account or looking at my, Bybit spot portfolio or like anything like that, instead of doing that shit, I'm just going to play Pokemon. So I'm not kidding you. I'm out here, out trading people playing Pokemon. Just imagine that, right? It's ridiculous. So this is you have to find a way to zen out, man. You have to find a way. You have to find a way to stop being the person that, stops your own success. I'm not kidding you. This is a real thing that happened. I can show you the receipt for the Pokemon game. I think I bought it like September 18th or something, right? Right after Bitcoin reclaimed that high time frame trend. So like somewhere around here. Yeah. So somewhere around here is where I'm like, okay, I need to do something else. I need a time dump, right? I need something to pour my time and energy into to get my mind off of markets so that I don't, stop my own success. So literally, Pokemon equals alpha. You're welcome. All right. Now that we got that out of the way, let's talk about the actual market, right? Man, first of all, let me just say I'm absolutely fucking euphoric, right? I just I have so much appreciation, so much gratitude for the market and for you guys as well. I am always a perpetual optimist, as you know. I do my best to be at least. And now it's much easier to do that, right? It's much easier to show gratitude. It's much easier to see, the silver lining in things because times are great. And you know what? In addition to times being great right here, right now, we're seeing crazy 50% candlesticks on altcoins and stuff. Fairly liquid altcoins, which by the way, some of them same altcoins that we talked about. When we're seeing that kind of market environment, man, that doesn't typically just fade away, in a week from now or 2 weeks from now, 3 weeks from now. That tends to stay and linger for quite some time, right? We're talking multi months. We're talking potentially a year long bull market. And sure, maybe we have a month of sideways or 2 months of chop or whatever, or maybe a month of downtrend. But we're talking about multi month long trends, opportunity, and then it rinse repeats, and then more opportunity, and then we rinse some of that, more opportunity. Man, the future looks bright. So it's not just that, we're having an incredible time here today, but the future looks even brighter than ever. This is coming from the person who has told you, man, the future looks fucking bright right now, even when it was still pretty dim, right? I'm telling you, I'm thinking on a much greater scale. This is why I say if I'm sitting here talking about, price targets or what I'm looking for this market, you're going to consider me delusional. But I have been this way for 2 months now, right? So am I delusional at this point, right? Or is it, hey, we finally understand context and we know that, this time is different. We know how to scale. We understand how to think logarithmically. Crazy and genius are next door neighbors, right? So that's how I'm kind of looking at it. It's a beautiful market, man. It really is. Do not for a fucking second sit here and think that you missed out on all your opportunities because your Pepe bids got front ran, right? Or, oh, you swear that you were going to take that trade on Dogecoin, but for some reason you didn't take it, right? Myself, it was and you guys saw this, we talked about it. It was the bonk trade. Man, I overcomplicated this, but that was my analysis. That was my read on the market. And we started to chop up this region. So this reclaim of 4-hour 200s, I said, I see the potential, man. This looks really good. I see the potential. It's there. I need to add this to the watch list. I keep my eye on it, but I'm not all that confident, right? Because look how much this range low has gotten chopped up. So for bonk specifically, could not justify the risk personally. But obviously, this is the kind of market environment that we're getting, right? Bonk immediately pulls a 100% move in the span of the next 4 days. So do not, though, do not sit here and fucking think that you've missed all your opportunities just because bonk is up, 50% today, Pepe's up 50%, this coin's up, 30%, whatever. Don't you for a second think that you missed out on all your opportunities and there's nothing else. There has never been a participant in a bull market where the actual problem that they're facing is that there's not enough opportunity. That's never ever been a thing, right? Not once. Not a single person that has ever traded bull markets has ever found a lack of opportunities. There's always an overabundance. The nature of bull markets is you are inevitably going to miss out on way, 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 way more things than what you catch. And yet, even the tiny little morsel of things that you catch is going to fucking change your portfolio and potentially change your life. That's how crazy bull markets are. So we need to get our minds out of this scarcity mindset and into more of an abundance mindset. We've been saying this for months on end. It only gets realer, right? It starts to feel more legitimate by the day. Keep in mind, this is still what Bitcoin dominance looks like. If this doesn't get the point across, I don't know what fucking does, right? Pepe is up 50% today. Bonk is up, we talked about it not even 5 days ago, and it's up 100% since. And look at what Bitcoin dominance. Bitcoin dominance is sitting here implying to all of us, hey, there's not any opportunity out there in the entire market other than Bitcoin. If you're not looking at Bitcoin, you're an idiot. What? Excuse me, Bitcoin dominance. Did you not hear about Pepe getting listed on Robinhood and now it's up 50%? Did you not see that Bonk, reclaimed 4-hour 200s, pulled back into it, and then from there held the higher low and then immediately went on a 100% rally? Bitcoin dominance, what the fuck are you talking about? Exactly. That's the point. If we're able to see these kinds of opportunities when Bitcoin dominance, which basically means Bitcoin is sucking the life out of the room, right? Oh, hey, you're in this stupid little 2017 dinosaur coin that hasn't moved in 3 years. Oh, that's cool. Maybe sell it and go buy Bitcoin, right? And because that's what other people are doing right now, right? They're selling their Litecoin to go buy Bitcoin. They're selling their XRP to go buy Bitcoin. That's what's happening. So we're seeing Bitcoin continue to suck the life out of the room. What do you think happens when generally, right, across the board kind of basis, Bitcoin dominance is giving life back to the rest of the people in the room? What do you think that market looks like, right? Guys, it happens every single fucking cycle. How many people have you heard tell you, oh yeah, 2021, oh, you're never going to see that again because that was, that was because of the stimulus, because of COVID, right? You'll never see that kind of environment again. Well, throughout October 2023 and throughout the past, few weeks or so, we have most definitely experienced that environment once again, right? Especially in shorter form, narratives and in spurts here and there. Don't tell me that RNDR going from $1 to 13 in the span of 4 or 5 months is not reminiscent of that kind of environment, right? That happened 8 months ago, not 2 weeks ago. So, don't tell me that Doge going from 10 cents to 40 cents in the span of a week and a half is not reminiscent of 2021 bull market because there's no stimulus because of COVID, right? It happens every cycle. The people that do well in 2017, I don't know for what reason, right? What cognitive bias it is, but it's like, hey, I did well, and now that opportunity is locked off. You cannot make it the same way that I made it, right? It's never going to happen again because I got lucky and I took advantage of it. So no more opportunity for you, right? Greed just stopped existing, guys, because this one person did well in 2017. So now every human ever just forgot what greed was, and now the world lives in beautiful harmony with world peace and no world hunger, right? That's how the world works. And then the same people that do well in 2021, oh my God, I did so well. This bull market was even crazier than 2017. The people in 2017 told me that I would never see anything like 2017. And here I am, and I did well in 2021. Hey, 2022, bear market enjoyers, you guys are never going to get what I got. What? Excuse me? Isn't that what the same people told you the cycle prior to that? And then the people that do well in this cycle, what do you think they're going to say? Oh, yeah, that was so crazy, right? Bull markets just get crazier and crazier and crazier and crazier. There's more money being printed by the day. There's more people looking for places to put risk onto the market to hedge crazy inflation and all this kind of stuff by the day, right? economies increase and get better by the day. Bull markets are inevitable, the same way that bear markets are. It's gonna happen eventually, right? It is an inevitability. I don't know if Bitcoin dominance continues to trend like this for another 3 years or another 3 days, right? And then it starts to top out. But eventually that trend is gonna break. What do you think happens when it does? That's the point. FOMO is not real. It's in your head. You made it up. There is not a lack of opportunity. By the time that all the dust is settled and we're trading at bear market lows after a year or two or whatever, right? Maybe in 2025, 2026, whatever, right? Whatever your hypothesis, your thesis is, by the time that that has occurred and we're in the depths of the bear market, we're at the, very, very bottom of the valley, right? By the time that that has unfolded, your biggest issue will be, I did not keep enough of what I made. Not, I didn't make enough, right? I've been in this industry for 7 years now. I joined, actually, November 7th was the first day that I bought crypto in 2017, right? I've literally been here 7 years. I've had the luxury of talking to thousands of crypto traders in those 7 years. Not once have I ever heard somebody complain about, I didn't make enough. I've never heard anybody say that. Every single person that has a complaint that has, been a previous cycler, right? Oh, I have 1 or 2 or 3 cycles under my belt at this point. Okay, cool, good for you, right? Hopefully you use something. Hopefully that's invaluable experience that you can use to better your life in the next cycle, in the next, crazy bull market, whatever, right? But those people always have regrets. And their regret always is, I made this much and then I lost most of it, right? Hey, I ran 10,000 into a million, but I only have 50,000 to show for it. What? And I'm not kidding you. These numbers, they sound, surreal. Like, how could somebody possibly run 10K into a million and then only have 50,000? It's like every other fucking person has a story like this, right? It's absolutely ridiculous. So maybe not every person is that extreme, but every other person is that extreme. And every person has a story like this, myself included, right? You guys have heard my story many, many, many times. I'm going to take a sip of water here. So that's the main issue. That needs to be the primary focus, right? We need to stop kind of letting our minds dwell in this state of things that don't exist, problems that don't actually affect us and are not actually problems. Oh, I missed the Pepe announcement and it rallied 30% from that announcement. Oh, I'm probably going to have fun staying poor for the rest of a generational bull market. Do you understand that? You understand how silly that is? You just made that up. That doesn't make any sense, right? If somebody's telling you, hey, this is a generational bull run, this is a golden bull run, right? Banana zone, global liquidity projection, right? Q4 seasonality, bullish rate cuts, whatever, right? Money printer go burr again. If that's what people are telling you, and your first thought is, oh, I'm going to miss out. Then yeah, you are going to miss out, right? Because your form of missing out will be, you're going to throw shit at a wall every now and then, through emotions. You're going to say, oh, Doge is up 30% today. Well, it looks like it might go up 50%, tomorrow. It's not pulling back. There's no setup here. There's nothing really for me to take action on, but I feel like I'm missing out. So market buy Doge. And then guess what? Dogecoin does go up 50% tomorrow. And you're like, oh my God, I'm a genius, right? But when does the market look the most bullish? When does the market have every single reason to continue higher? Hey, yeah, we didn't care about this bear div, right? And sure, there's another bear div, but we didn't care about the previous one, and we didn't care about that bear div, and we didn't care about this bear div either, and we didn't care about the bear div here, or the bear div there, or the bear div there, or the bear div there. And yeah, these are higher lows, are they not? Are they not higher lows? Oh, wait, in addition to that, Coinbase IPO just occurred, right? Coinbase IPO right here. That's so bullish, right? Think about Coinbase. Now it's a stock. Now people get to take that same exact bet. We're moving our way into the traditional world. How in any fucking way is this bearish, right? It's not. There's no way in hell anyone with a rational, level-headed mind is going to say, oh, all of this is bearish, right? And then it is. When does the market look the most bullish? At the top, at whatever the top is, and you're not going to know that. So that behavior, oh, I feel like I'm missing out, right? It kickstarts a spiral. And that spiral eventually leads into you starting to succumb to losing kind of behavior, things that will inevitably cause you to blow up and live what we call the life cycle of a turkey. Does everybody know what I mean by that? Right? And this is why we say you don't allow your conviction to increase with price action itself. So I'm giving you the same, haphazard bullish arguments at 92K that I was giving you at 57. Why? Right? Because significant events dictate my confidence, not price action. So if your confidence in the market mirrors price action, you're going to freak out on this little dip. But you're going to get very overzealous on this little pump. But then you're going to freak out again on this little dip. But then you're going to feel like an idiot that you missed out on what is clearly going to be a bull market rally on that little pump, right? And then, yeah, you're going to miss out on this dip again. You're going to get shaken out. Oh, but then you're confident. You're going to mirror whatever price is doing, right? Oh my God, we're at the highs. Clearly, we're going to go higher. Oh, we're at the lows. Oh, clearly, we're going to go lower. Oh, we're at the highs again. Oh. Except what happens after an 8-month-long bull market breaks down from a key trend and shifts structures, bearishly for the first time in 8 months? What happens? The trend breaks, right? Eventually, the trend is going to break. Whether it's 3 months, 8 months, 3 years, 8 years, it doesn't matter. The trend is eventually going to break. Price action will look like this. At this point, if trends start breaking down on Bitcoin, there's absolutely zero way that I lose, right? Because price action does not dictate my confidence. Significant events do. The significant events for me, personally, my triggers, were all the way down at 57K. We start to break down below trend. We're still going to be trading at, 80Ks by the time that happens. I cannot lose. It's not possible. But if your price action is if your confidence is mirroring price action, what happens in your P&L is this. Because when are you the most confident in price going higher? So it's the lack of ability to think logarithmically, to dream, to execute on that idea, to know that irrational thinking in an irrational market environment is actually, if you really think about it, that's pretty rational, right? And then do your absolute best to execute on that, and then not be able to see all the opportunities that potentially await you. So now we start allowing external things to come in and hinder us, in addition to, oh, I got stopped out in a wick. Oh, this trend trade didn't work that time. It's actually plan C. We're starting to form a little bit of a range. Oh, this happened. Oh, I got slipped on my position, right? The inevitables, the things that are going to impact you anyways, it's going to happen, right? Oh, this news event came out. Now, literally everything is down negative 15%. It's been 2 hours. What the hell happened, right? Yeah, it's going to happen. It's going to be inevitable. There's no way around it, right? You have to navigate that bullshit. In addition to that, now we're adding emotional kind of external factors to plague us as well. What if I miss out? Sure, I'm buying the trend pullback, but woe me, the market hates me, the universe hates me. What if I buy the trend and that's the time that it actually breaks down? So fucking what, man? That's the time it breaks down. Get used to it. It's going to happen. You have to be able to justify risk in order to take comfort in your risk so that you can potentially be rewarded. It's going to happen, right? If we allow these things to impact us, this is the inevitable end result. It's the same result as literally every other crypto participant that has come before you and will come after you. So we can't sit here and succumb to the same kind of behavior and the same philosophies and the same way of thinking and then expect that we're going to get a different result, right? Hey, I'm going to be the 5% of traders that are actually profitable. It doesn't work like that, right? Meanwhile, you're doing the exact same things and thinking the exact same manner as the other 95% of traders out there. That's not how that works, right? The universe probably is not going to give you a different result. So this all starts with being able to see the bigger picture. Every single day that you wake up, it needs to be, this has the potential to be my greatest trading day ever. I need you to know there have been traders that are absolutely fucking killing the market, like you and I, hopefully, right? Absolutely fucking killing it, that woke up today and got a notification on their phone that said, Pepe just got listed on Robinhood. And then from that listing announcement, they then bought Pepe, and then it was up 50%. And those people may have had their greatest trading days ever. They didn't wake up today thinking, oh, Pepe's going to get listed on Robinhood. I need to be buying Pepe. They didn't think that. It just fell into their lap. When you put yourself in a position where opportunity may find you, it eventually comes around and smacks you in the face. And just because you can sit here and call yourself a crypto native as opposed to a retail normie, right? It's not like you're just joining, it's 2017, you saw a Twitter ad for XRP and you're like, this is interesting. By the way, that's how I joined crypto, right? It's not like that. It's, hey, I know what cycles are. Hey, I know what moving averages are. Hey, I know how crypto behaves. Hey, I'm aware of the volatility. Hey, I understand how things might chop and how to draw, ranges. Hey, I get this stuff, right? Trend portrayals, all this kind of bullshit, right? All this TA, all this vanity. I get it, right? It's going to fall into your lap. It's going to smack you in the face and say, take me. And then you're going to have the greatest trading day of your life. That's how that works. That's how luck eventually comes to be, is you continue to put yourself consistently in a position where opportunity may find you. You just show resilience. You show the ability to adapt and continue surviving. And you are persistent in searching for that opportunity. And then it finds you. That's how that works. You have to just survive long enough for that to happen. You have to just be able to think big enough for that to happen. If you're struggling with those things, it creates a domino effect and it creates a spiral where suddenly we are consistently on the wrong side of the market. Every single time that we're bullish, the market is overzealous and gives a -5, -10% pullback. And then when we start to get scared, now we're out of the market. Okay, you know what? That was degenerate kind of behavior. Let me start to bring myself back down to earth and discipline myself. Oh, that was a local bottom. That sucks, right? You don't want to be on that very treacherous kind of roller coaster. You have to find a way to break it. It starts with thinking bigger, looking for new opportunities, and then from there, finding a way to justify risk. You have to be able to take comfort in risk. That's the only thing that's going to be able to potentially bring you some kind of reward. When you can justify risk because, hey, we're at this trend support. Hey, we're at this confluence of an inflection point, right? Oh my God, there's support and there's this and there's this and funding has reset and there's this RSI bull div and this and this. Oh, wow, yeah, this seems like a pretty logical region to start to take a position at, doesn't it, right? Oh, hey, this is what invalidates me. When you have the ability to do that, you then allow yourself to take comfort in that risk. Whether that risk becomes, real or not, doesn't really matter because it's part of the inevitable kind of ebbs and flows that this market is going to give you throughout the next several months, right? Maybe a year, whatever, right? That kind of time frame where we're in this incredibly opportunistic environment, right? Main reason why I'm saying that and scaling it to such a high degree is because we're breaking out of an 8-month-long range. I'm not looking for a measly 20% move. I'm not looking for a 6-day, 7-day rally, right? I'm thinking directionally proportional. So if we're breaking out of an 8-month-long range, think about this consolidation as kind of fuel. So it fuels whatever the next kind of sustained breakout in either direction is, right? So we know that this is obviously, it starts to get pretty choppy. In real time, we navigated it pretty damn beautifully, I have to say. But, in hindsight, it is fair value, but it's kind of weird to call it a range, right? It's not really all that great. But it is 8 months of fair value. So think of that fair value zone as fuel to the next subsequent kind of trend thereafter, right? So we're breaking out of an 8-month-long range. We're probably targeting something that scales proportionally to that degree. So maybe a 3-month, maybe a 6-month, maybe a year-long kind of rally, right? Obviously, there's going to be lots of negative 10% pullbacks, hourly trend retests, maybe even hourly trend breakdowns, right? There's going to be lots of those things. That's fine. But big picture, we're talking about an 8-month-long rally. Nobody cares that Bitcoin did this, right? Because it ended up doing this anyways, right? Nobody cares that Bitcoin did this because it ended up doing this anyways. That's the point. So nobody cares that Bitcoin did this, right? All of yesterday, that Bitcoin did this because here it is doing this today. Same concept. So we have to think bigger, right? If you understand your system, if you have been able to navigate markets fluidly when it has been nuanced, when it has been contextual, when it has been bullshit, right? When you've been able to take comfort in your risk and say, okay, here's a trend setup, here's plane A part 2, here's a range claim, reclaim deviation setup, right? Along with high time frame trend. Here's a range high pullback retest, right? Here's this, here's that. Let me justify the risk. Let me build my experience. Let me understand my own discretion. Let me start to separate what is just a solid trade setup. It's valid, sure, you could take it, no big deal. I pass up on 100 of those every single hour of every single day, right? Or what is an incredible trade? What is, I cannot pass this up. This has the ability to be a portfolio changing trade. Let me start to build that discretion. Oh, as a result of building that discretion over the course of 8 months in this nuanced, choppy, bullshit market environment, right, where opportunity is a little bit more scarce, right? We always say opportunity is abundant, but clearly it's a lot more scarce in an 8-month-long range than it is today, I would say. I don't think that's an unfair statement. I think everyone would agree with that. Yeah, sure, we can still find those opportunities, but I'm not really all that profitable, right? Over the course of 8 months, I've increased my account maybe 5%. That's really nothing substantial. I'm not really seeing the value in this, Mercury. All of a sudden, the environment changes. We've continued to mitigate our drawdown. We've continued to take comfort in risk, play these setups that are straightforward, that are winning mindsets, right? That win long term. We apply those things. And the drawdown of which is now being curved to the same degree, but the potential gain has increased exponentially. So what I mean by this is kind of gradual, profit increases. Nothing really to cry home to mom about. We're still making sure that we're not giving back too much to the market. Maybe we get caught off guard, we're oversized, make a little bit of a lower low, right? Maybe we even downtrend on our P&L for a little bit, or maybe it's stagnant for a few months and we really don't have much to show for it, but it's kind of just, it's gradual. It's really not anything too substantial, right? It looks more like this. And then all of a sudden we start to enter more of a trendy environment. And the same philosophies, the same principles, the same concepts, the same setups, the same system is now allowing this. This is the final exam. I would hope that you've used the past 8 months as practice. I would hope that for the past 2 months, you have at least, do not fucking tell me. I'm not going to sit here and say, you should have been all in on your entire portfolio because I was screaming at you all these bullish arguments. Guys, I'm not fucking stupid, right? I get it. You're not going to sit here and base, your financial investments and whatever off of a random 25-year-old internet stranger. At least I hope that you don't, right? Truly, honestly, please don't. I get it. That's not my hope for you. My hope for you is, for 2 months, I've presented the arguments. I would hope that you've at least been able to see that side of the coin, right? And nobody's been tunnel visioned on, no, I don't get it. No, we're still clearly in an 8-month-long range. No, the thing that I joined crypto for 5 years ago, no, that can't happen today. No, the universe doesn't like me that much. Didn't you know that, Mercury? No, this is obviously still a lower high on the weekly. You just don't know how to interpret market structure. I would hope that nobody's in that kind of mindset, right? So for the past 8 months, that's practice. For the past 2 months, I would hope that you've at least had the potential to see, hey, the final exam might be coming up. Now it's the final exam. If you're going to look at me and say, Mercury, can you teach me a system? Hey, what are moving averages? Hey, how do I interpret market structure? Hey, how are you drawing your gray boxes? it might be a little too late. I'm not going to lie to you. The time to learn, the time to put your head down and lock in and refine a system and build discretion and build experience and get stopped out on wicks and experience drawdown and learn how to accept losses and all that shit was in an 8-month-long range, right? Or the 1.5-year bull market leading up into an 8-month-long range, right? Now it's the bull market. Now it's not time for trial accounts. It's not time for back testing. It's not time to switch it up and say, oh, well, I have been a moving average trader for the past 2 years, but maybe let's try RSI, right? It's not fucking time for that, dude. It's not time. It's the final exam. Show us what you know. Show us what you've learned. What discretion did you build? What experience did you build for yourself so that you could use for this environment? Because guess what? You spend, whether you know it or not, 100% of your time trading crypto waiting for the 10% of the time that it resembles this environment. Now it's time to play that environment, right? You're not going to see me try and run up, I'm going to try and run up a trial account, guys. Let me see if I can take $1,000 and run it up to 50,000. Why the fuck would I do that? I'm going to go trade with my main account so that I can change my fucking life. That's the point. I'm not here to try and be cute and run up a quick 50x on Phantom Wallet. I don't care about that shit. I'm going to go trade my main account because this is the entire premise as to why I'm here in the first place. Now's time. Now is go time. This is the environment. I would hope, at best, you have refined a system and a strategy for yourself. You have learned about yourself and your innate natures and your tendencies, right? The things that tend to handicap you. The greatest kind of fact is every single trader, including everyone watching this right now, can pinpoint exactly what their biggest downfall is. So it's not that you don't know what hurts you, right? Some of you are like, yeah, I tend to just like lose it all of a sudden, right? Like I'm disciplined for 6 days and then for whatever reason on Sunday, that 7th day hits and I'm like, oh, market buy with half my account, right? Some of you know that you succumb to that behavior. Some of you, like myself, can't hold positions for too long, right? That was my biggest issue 5-6 years ago. Man, I'm entering this position on Bitcoin and I'm targeting a 6-month-long 200% rally. Okay, yeah, but we're up 5%. So that feels pretty good. Market close, right? That was my biggest issue. It's not that you didn't know your biggest issue. It's not that you don't know it now. It's that you had to learn to overcome it and how to overcome it. So that when you could apply the same concepts, the same behaviors, the same strategies with the same system and draw gray boxes the same way that you usually do and interpret market structure the same way that you usually do and manage your risk the same way that you usually do, but in a bull market where the potential has now increased exponentially, you were able to do that. There's a very fine line between it's too late and hey, we're just getting started, right? In a way, it's both. It's not mutually exclusive. Let's not be delusional. I said, hey, we're just getting started. And you know what? I do believe that I am right. And I think that when you go to that Bitcoin dominance chart, it very much protrudes why I am right on that idea. We're just getting started, man. Bitcoin dominance moved up today. Meanwhile, meme coins are up 50% in 24 hours, right? Oh my gosh, man. This is the same market, by the way, that people were complaining about back here, the worst bull market ever. When the same coin that rallied 50% today, Pepe, had ran 800% in 2 weeks somewhere during this rally. Oh yeah, it's the worst bull market ever, by the way, guys, right? Meanwhile, as that's happening, Bitcoin dominance continues trending higher relentlessly, the same way that it has for past 2 years on end, right? Hasn't even looked back. It's making new highs here today. That shows me, hey, we're just getting started. But in that regard, really what I'm referring to is the amount of opportunities that are going to come your way. We're just getting started. You remember the 80-20 rule that we always talk about, that Pareto principle? You put in 20% of input and you yield 80% of your output, right? In trading, maybe 80% of the time you're sitting here trading this nuanced contextual bullshit kind of market. You're like, I'm applying these setups, but sometimes I get 3R, but then other times I lose 1R, but then other times I gain 0.8R, but based on how I managed it. It's not really anything crazy. And then all of a sudden you apply the same principles, and then the 20% of the time that you're trading this environment accounts for 80% of your reward. Wait a minute, hold on. I'm doing the same shit that I was doing in this range, right? On these altcoins that were giving me 10, 15, 20% rallies, in a 2 or 3R trade at best. And now I'm applying those same concepts, and hold on, now I'm getting 20, 30, 40, 50R. We're talking multiples, right? Hey, I bought this coin, Mercury. I'm up 300% in a week. What would you do if you were me? I don't know, because I didn't buy that coin. I'm not you, right? You should ask yourself what you should do. That 20-80%, 20-80 rule, right? Pareto principle. So it's the same kind of concept in that regard, where it's the last 20% that accounts for 80% of the gains that you're going to make from this market after it's all said and done. Did you just hear what I said? Look at the fucking market that we're working with. Somehow, some way, this is the worst bull market ever when we're trading 300% higher than the bear market lows just a year and a half ago. We're currently 500% higher than those same lows. And I'm sitting here telling you 2080, 80% of the opportunity has not even come your way yet. Of that 80%, think about this. When did SHIB get created in last bull market? It was one of the greatest performers in the entire market, right? It was one of the hottest runners, the hottest coins with the greatest narratives in the entire 2021 bull market, right? Shiba. I don't know if it's going to show it because most of its rally, I'm sure, didn't even occur on chain. I'm sorry, on centralized exchanges. Where is it? Yeah, see, I don't even know what chart shows it best. If you guys do, maybe point that out to me. But you get the point, right? When did Shiba get created? We go back to the Bitcoin chart. I do believe it was somewhere around here. Do you understand that? 80% of your opportunities have not even came your way yet. And of those 80% of opportunities, maybe 30, 40, maybe 50% of them don't even fucking exist yet. Guys, I was on honeymoon for 9 days. And I came back from my honeymoon to scroll my crypto Twitter timeline. And it was ran by Elon saying, hey, Department of Government Efficiency, and AI terminal bots tweeting on my timeline. The GOAT ticker, that narrative, came and went in 9 days from 0 to $750 million market cap, 9 days. I came back and my entire timeline was being run by AI terminal bots. What the fuck do you think happens in a multi-month long, potentially year-long bull market where Bitcoin dominance is trending down? That's the point, right? At the same time, it would be naive for me to say, hey, we're just getting started. We're not. We're not just getting started. Where were you the past 2 years, Mr. We're just getting started? Where were you? Didn't you know that Pepe got created right here? Pepe, yes, the coin that rallied 50% today, got created here, somewhere at these highs, or maybe during this range, I can't remember. Right? Regardless, in the midst of a 7-month-long range unknowingly to us at the time, Pepe got created and then ran from 0 to $1 billion market cap with more speed than ever before. Any coin ever. Oh, and then by the way, since then, we've had about 3, 4, or 5 coins that have ran even faster from 0 to $1 billion than Pepe. Right? Pepe did it in 12 days. We've had several coins since then that ran faster in less than 12 days. Oh yeah, but guys, 2021 participants are here to let you know you're never going to get a crazy alt season bull market ever again. That's not how that works, because human greed stopped existing because I made it the last bull market, guys. Right? That's how we need to think. We missed out on Pepe today, 50% rally, so we're going to have fun staying poor for the rest of forever, right? Clearly. Think bigger. Think bigger. At the same time, it's unfair for me to say And I would not be able to go to sleep tonight in good conscience knowing that I told you, hey, we're only just now getting started. Where the fuck were you the past 2 years, mister? We're just getting started. Right? It was not the worst bull market ever. I don't know if we're looking at the same market or not for all the people that were saying that only 2 months ago. Isn't it crazy how much changes in 2 months? So what do you think happens when we expand higher and continue a 4-year cycle and follow global liquidity and continue the Q4 seasonality and break out of an 8-month-long range? Oh, and by the way, we did all that 6 days ago. Dramatic pause, right? That's the point. We have to think bigger. At the same time, if you just started today, Mercury, how do you trade your system? What is a pullback? Wait, what is a trend per trail? Wait, how do I draw a market structure? Wait, hold on. It might be a little too late, right? Because we're not just getting started. We started 2 years ago. Right? So there's never a better time than now, but at the same time, my hope for you is that you refined your skills, you really honed in on those skills, and you are ready for the final exam, because this is it. This is what we're here for. You're not here. Man, how many fucking times did I say this? You are not here for this rally into here. I love that rally. Wow, it's so amazing. Look at that fucking rally. Whether you know it or not, you're here for this rally. You're not here for the rally from here into here. Wow, look at that rally. Isn't that so crazy? Wow. You were here for this rally. You are not here for the rally from here into here. You're here for the next one. This is the final exam. This is what you have spent 100% of your time waiting for, even though it only occurs about 10 to 20% of the time. Congratulations, we all won forever, and I told you so. Right? Is that not the TLDR for the live stream today? Congratulations, we all won forever, and we called it. We talked about it over and over and over and over and over again. Now it's time. I hope it feels great, right? If it doesn't feel great, please know, just by being a crypto native, right? Because you are not the person that is out there sending the text messages to other people saying, hey, would you buy Bitcoin here? Or would you wait until after it breaks $100,000, right? You're not the person sending those text messages. I know that because you're sitting here watching my stream right now. You're a crypto native, right? You understand crypto. You've probably been here for, a couple months at minimum, I would imagine. So because you are not that retail normie, because you are a crypto native, you're probably going to see some kind of indirect benefit. I say indirect, but really it's direct. Meaning like the success of crypto overall probably does affect your success, whether it's directly or indirectly. Most likely due to you just having spot bags, right? How many of us just have ledger accounts in addition to us trying to hone in on our, trading skills, right? Or a crazy, meme coin bag that you forgot about, which, by the way, I did this on Floki, right? It happens. On Floki, it doesn't show it, but I literally bought the top on Floki all the way back here in 2021. So let's pretend that it did this, right? I bought the top on Floki in 2021. I forgot about that bag. I came back and sold it somewhere around here for the same amount as what I bought it for, right? That was a clearly emotional slip up in my, in my discipline. That's considered peak bull market euphoria, right? Oh my God, clearly it looks like it's going to go so much higher. How would it not go higher, right? Why not? Oh, I'm up this much. Why not throw a bag at Floki? So it wasn't like a crazy, portion of my portfolio, but then when we start to rally 3 years later, it's like, oh, wait a minute, this just fell into my lap. Now I have that position back, right? It's like nothing ever happened. Like I never actually made that mistake. I can just erase it, right? Got my money back. That kind of stuff. Oh, an airdrop that you signed up for or a whitelist that you were on that you forgot about. Whatever it is, right? An NFT that you were holding that suddenly just comes back to life. Whatever it is, most likely due to spot holdings, right? I would imagine. But whatever it is, you're probably going to be benefited, right? A beneficiary of crypto good, right? Crypto go up equals good. And then that helps you. You have to be able to find some amount of content in that occurrence. You have to be able to. If you're unable to be content, you're going to find a way to be miserable. That's just like how the universe works, right? I didn't make the rules, right? But this is at least what I've found. I'm not projecting onto you. I'm not wishing anything upon you. But if you cannot find a way to be content with the gains that you've made today, you're going to find a way to be miserable, right? And it's that that greed is the murderer of satisfaction or thief of joy, right? My father always told it to me as jealousy is the murderer of satisfaction, but people most often know it as greed is the thief of joy. So, got to find a way to be content, right? Your issue is probably not real issue. Like people come up to me or DM me and say, hey, I feel underexposed, because Bitcoin looks like it's going to go to 100K plus, and I only have 30% of my portfolio allocated to Bitcoin, right? Meanwhile, we have Larry Fink, greatest asset manager across the globe, by the way, right? Manages the most money out of any human ever in terms of managers, like funds. We have Larry Fink on national television saying, hey, all you Americans and whatnot, yeah, you guys should buy some Bitcoin. 2 or 3%. You should hedge against the risk. You should buy some digital gold, right? Some Bitcoin. And just allocate 2 or 3% and you're good, right? If everyone did that, then you're good. What? 2 or 3%, Larry? Like, Lair, are you sure? Like, we're talking about Bitcoin, right? The thing that moves in 4-year cycles, like global liquidity projection, like it lags it, like that coin, the thing that is known to historically uptrend into new all-time highs and then cascades into crazy bull markets and other sectors of crypto. That, right? 2 or 3%? Yeah. Then you come up to me, hey, I'm only 30% exposed to Bitcoin. What would you do if you were me? I feel kind of sidelined. Should I refinance my house so that I have more money to buy more Bitcoin? Like, what should I do? You're going to get absolutely wrecked. You're going to get destroyed. You didn't find a way to be content. You're probably going to find a way to win to some great degree, right? Again, I've never come across a person that has experienced a full-fledged euphoric bull market. Multi-month long, we sustain trends, and then eventually Bitcoin goes sideways for 3 or 4 months, and then we're like, oh, this fucking sucks. Our king starts to go sideways. Wait, it's not crazy. It's not up 10% each day anymore. This sucks. Oh, maybe we should buy Ethereum. Oh, maybe we should buy this altcoin. Oh, maybe we should buy this other altcoin. Oh, maybe we should create altcoins, right? Because we ran out of things to bid. Oh, wow. Hey, maybe we should rotate to this sector, right? Hey, NFTs are pretty cool, aren't they? And then NFTs pop up and we have a whole mini bull market just in NFTs alone, right? That, I've never come across anyone that has experienced that kind of cycle and then said, yeah, I didn't make enough. Your issue is going to be, I didn't keep enough of what I made. You have to think bigger. You have to find a way to be content. And you have to find a way to take comfort in risk. Notice how these are the same philosophies that I have spewed at you every single live stream since however long you've joined. We've always said, you have to find a way to take comfort in risk. You have to be disciplined. You have to be content with the progress that you're making. You have to be able to think bigger. You have to know when to scale opportunities in a logarithmic kind of fashion. You have to know these concepts. Now, they're even more applicable than ever. And they're even more appealing to apply than ever. Because this is what you're here for. So I'm going to digress. I'm going to take a step back. Maybe we don't even need to really do like a true, hey, we need to go talk about Ethereum, and we need to talk about this, and we need to talk about that. Ethereum looks good. If you saw my tweet the other day, it was, let me explain it to you guys. We are so bullish that Ethereum looks good, and it's not a counter trade signal, right? That was my way of trying to get a point across whilst being funny. I would hope that you guys think I'm a comedian. Don't worry. I'm not going to quit my day job and then go be a comedian, right? But it was a joke, and it's true. So Ethereum still looks really good, and it's not a counter trade signal. It is just Ethereum looks really good because that's how bullish this market is, right? Contextual kind of way of thinking. I did not say this the last, lower high or the high before that or the high before that or the high before that for 4 months on end. We didn't say these things, and now we're coming in and saying them today because we broke out of a 4-month-long range, because we're deviating back inside of a 5-month-long range at the same time as that's happening, and because we're reclaiming a weekly trend portrayal. Last time that we did this is what we got as a result. And the time before that, having reclaimed that trend portrayal, this is what we got as a result. So proportional ways of thinking. We just broke out of this range and reclaimed those 200 dailies 5 days ago. We're talking about the last time that we did this, we can even count this lower high, right? Because this is the thing. When you have a winning mindset and you're able to compound that, and you're the person that's trading trends on the way up and then getting stopped out on those trend trades on the way down when they break, what inevitably happens when you're compounding that wealth over time and 4-hour 200s look more or less like this, right? What eventually happens is that when we go to reclaim those 4-hour 200s, you're like, oh, wait a minute, hold on. We haven't done this in a while. That's pretty cool. And then that move alone, by the way, we did talk about this rally before it happened in real time. So it's not just hindsight. It's not me telling you something that would not have been applicable at that time. That move alone is then an additional 30%, right? So compounding wealth, man, this is the appeal, to refine a system, to make sure that you're tried and true. Market exists, I exist, I'm always going to win. Sometimes I just win much greater than others, right? That's the idea. So last time that we did this, we're talking about a 211-day rally. We just broke out and reclaimed key levels on Ethereum 5 days ago. Last time prior to that, we're talking about a 200-day rally. You're talking about 3/4 of a year rally, right? Half of a year rally. Not, oh my God, we broke out 5 days ago. Maybe this is a top signal today, right? No, that's not what we're talking about. That's not the scale of which we're thinking. So, proportional thinking, right? Directionally proportional. So, reclaiming a very, very high time frame trend, breaking out of a 4-month-long range to the upside, as well as reclaiming or deviating back inside of a 5-month-long range. These are all very high time frame things. So we can find ways to refine that a little bit and provide a more contextualized and more in-depth analysis, more actionable, right? Hey, what if the 200 dailies don't pull back and don't get tested? Well, okay, right? Maybe 4-hour 200s do. And 4-hour 200s as it stands, because we only broke out 4 days ago, are still all the way down here. So if we were retesting them, it would be confluence with our 200 dailies, right? By the way, this is going to get into me answering some of the questions that we do have here today, which has to do with how do we adapt to the volatility of the chart. So 4-hour 200s are not helping you, right? They're telling you the exact same thing of which you already knew. So you need a more actionable analysis, right? So typically we would go, oh, okay, so this is a high time frame trend. We just got done talking about, a very, very high time frame trend. We need to keep zooming in, maybe a local trend. So we go, oh, maybe the hourly chart, right? Oh, that's not really, all that great. Maybe we can find a better portrayal for a local trend. Oh, maybe the 30-minute chart. And then there we go, right? So all the people complaining, oh, my 30-minute 200s, oh, I was going to get a pullback, but, I was going to buy that dip. I promised I was going to buy it, but, it just wouldn't pull back. It's so damn strong. 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 Oh, we got my pullback. It happens. You're going to get your pullback into 4-hour 200s too, eventually. I don't know if that happens in a week or maybe tomorrow or 3 weeks or a month or 2 months or 3 months. I don't know, but eventually it's going to happen, right? Because eventually all trends break. How do you break all trends without testing 4-hour 200s? You can't, right? So eventually you're going to get your pullbacks on these higher time frame trends. But if meanwhile, prior to this price action happening, you're like, well, this kind of sucks. I'm continuously getting sidelined on Ethereum. What do I do here? You have to continue adapting to the volatility, to the nature of the chart. If you are hard set You cannot comprehend, you cannot fathom being sidelined on fucking Ethereum for whatever reason, right? And you're too antsy and too eager, and there's too much urgency, and you're too desperate to sit here and wait for a 30-minute 200 MAs pullback. You need to keep zooming in, right? Or maybe even if you're not so desperate for that pullback, but you just want an actionable kind of way of portraying, hey, when am I potentially going to get that pullback? You need to keep zooming in order to find actionable analysis, right? Because these 30-minute 200s prior to this move, they're not helping you, right? They're pretty damn clean prior, but right now, man, they're not helping you, right? You got to keep zooming in. So we keep zooming in. Check this out. We go to something like a 5-minute chart, and now we can see maybe what we're going to label as a parabolic trend portrayal, right? So the further side of the extreme, so we have, let's say, usually we just have local trend, and then a high time frame trend. And then we have the other sides of the extreme, right? We have very high time frame trend. So we said for this, it was the 200 daily moving averages, which portray the weekly chart. And then here we said 4-hour 200s, which portray the daily chart. And then right here we said 30-minute 200s for, let's say, hourly / 4-hour market structure. And then we go to the other side of the extreme. So we're going further in depth, right? So we have very local trend, or what I often call parabolic trend portrayal. And in this case, we're saying 5-minute 200 moving averages. Now you know the context for Ethereum on literally every single fucking time frame. So whether you want to trade these 5-minute 200s or not, up to you. If you just want to use them as a way of the snowball to snowman kind of way of thinking, right? You cannot build a snowman without building a snowball first. That's not how that works, right? Obviously, not every snowball that you're going to build leads to a snowman. What is the main purpose of 95% of snowballs that get created? You throw them at your friend. It's funny for all of 5 seconds. They throw one at you. Ha ha, let's go inside and drink some hot chocolate, right? It's cold out. Get the fuck out of here, right? Let's go back in. There's actually heat inside, right? And let's drink some hot chocolate. I'm about to get frostbite. That's the premise of 95% of snowballs, right? So you can't create a snowman without building a snowball first. And at the same time, just because you built a snowball doesn't mean that you're going to build a snowman, right? I don't believe you. It's really not all that big of a deal. We're talking about 5-minute 200 moving averages. But because you took all of 5 seconds, not even, to dig your hand in the snow and pull it up, right? Pull up a clump of snow and then take your other hand and mold a ball shape, you are now on the path into going into whatever the next step is into building a snowman. Now you're allowed to retest your local trend, right? If the local trend breaks, maybe you're going to retest your high time frame trend, right? You're building that snowball. You're compounding onto what you've already built. The reason why I say 8 months trend where we're kind of uptrending on this time frame and then we're kind of ranging on this time frame, but then if you zoom out, we're downtrending on this weekly time frame and we're doing this on the low time frame, we're ranging, and then we're doing this and we're doing that. It's contextual, nuanced bullshit, right? It's the gray zone. We're not in a bull market. We're not really in a bear market either. It's just the market, right? It's kind of mundane. It's boring. How come today we have 22 people viewing live? Where were you 3 weeks ago when the market was still in the middle of a fair value zone, right? Where were you guys? Oh yeah, nobody cared, right? Because we were trading that kind of market environment. It was nuanced. It was bullshit. If you can navigate that, then this is very straightforward. You lose a local trend, or you lose a parabolic trend, maybe you go to the local one. You lose a local, maybe you go to high time frame. In this context, the high time frame trend, 4-hour 200s, looks like this, and the 200 dailies look like this. So they're the same thing at this point, right? For right now, they are one and the same, more or less. Eventually, as the trend sustains, the 4-hour 200s will adapt quicker, and 200 dailies will still be all the way down here, right? So then we can say, oh, we lost the local trend. Maybe we're going to pull back into the 4-hour 200 MAs trend, right? Which is right here at this point. Oh, we lost that too. Maybe we can pull back into the very high time frame trend. And then when you're in a bull market, this just rinses and repeats. When you are in a trend regime where it's uptrend on this time frame and we're uptrending on this time frame. Oh yeah, and by the way, we're uptrending on this time frame. Oh yeah, and by the way, we're uptrending on that time frame too. It's very straightforward. This is why I say, oh, you've been extracting 0.5 R each month for the past 8 months straight during a contextualized, nuanced bullshit market environment. Oh, okay. Now it's easy mode. Now it's Minecraft on peaceful. Have you ever played Minecraft before? Do you know what that means? Minecraft on peaceful? Well, actually, let's talk about what is Minecraft on hardcore, right? The hardest difficulty. Minecraft on hardcore is, oh, that sucks. You opened your door and a creeper blew your house up and killed you. Oh, yeah, restart the entire world. Start from scratch, right? Hardcore. Man, that's like a bear market, isn't it? Then you have, hey, this is hard, but if you die, you're probably going to die several times. But like, if you die, you don't have to start from scratch, but it is going to hurt, right? Maybe some of your items get lost, whatever, blah, blah, blah. Maybe that's an 8-month long range. Right now, guys, we're trading in what is the equivalent of Minecraft on peaceful difficulty, which is there are no monsters. There are no zombies. There's nothing that can hurt you directly. There's no villains. There's none of that. It doesn't exist. The only way you die is by fall damage or jumping into a pit of lava. In a bull market, the only way that you die is through your own stupidity. In which case, you deserved it. Here's the thing, and here's why I'm so adamantly about, saying it that way, and it's so arrogant for me to have said it that way. You know when your decision-making process is stupid before you even click a button. Every single trader can sit here right now and pinpoint, not, oh, I think I kind of struggle with this. You know the exact fucking reason why you lose money consistently over time. The main reason, the main handicap that you've struggled with throughout that 8-month-long range or throughout that bear market or throughout the 3-month-long 80% rally on Bitcoin, whatever, right? You know exactly your issue. You know exactly when you're doing something that might hurt you and might cause you to fall off a cliff or into a pit of lava, right? Maybe don't have walked that close to the lava. And then you can't fall into it, right? It's pretty damn hard to follow into it. It is Minecraft peaceful difficulty. It's very simple. It's very straightforward. We're uptrending on literally every single time frame. There is no, oh, but we're ranging here. Oh, but Mercury, this is still a lower high in the weekly. Oh, Mercury, you're saying that it's a higher high now, but I interpret market structure this way. Hey, Mercury, yeah, I know that you're crazy bullish, but we're still trading an 8-month-long range. It's not that. It's uptrend, 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 uptrend. A 4-year-old knows which way the market is headed on every single fucking time frame. It's Minecraft peaceful difficulty. You only screw up due to your own stupidity. You jumped off of a cliff. Why were you that close to the cliff? Why did you market ape 30% of your portfolio on 5x leverage at an all-time high just because you thought it was going to rip 50% higher in the next 5 minutes? Why did you do that? Did you not know that that was a stupid behavior that might get you killed prior to pressing that button? No, you knew it, right? That's why I say you have to have already put in the time. You can do well because the opportunity is going to be crazy. You're probably going to do well just because you're a crypto native, if I'm being honest with you. More times than not, that is the case. Just because you're involved with crypto and the industry itself succeeds to such a crazy degree and starts to eat up so much mind share of other people that typically don't give two shits about whatever Bitcoin's doing. How many people have gotten text messages just in the past week from people that you know or people that you haven't talked to? I love my cousin. I haven't talked to him in 3 years. He texted me yesterday morning and said, hey, I have a pretty sizable bag of Dogecoin. Would you hold or would you sell it? I haven't talked to him in 3 years. He didn't come to my wedding, right? He's texted me about Dogecoin, though. We're not those people. We have tried the process. We understand the risk. We understand what accepting losses looks like. We understand the nuanced, choppy, contextualized bullshit. So we damn sure understand uptrend, 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 uptrend. Easy mode. You only die to your own stupidity. So just don't be stupid. You know when you're being stupid. That's why I can say that. So all this to say, hey, Ethereum's reclaiming its parabolic trend once again. It might just simply continue trending. Oh, and because it tested its local trend, it held, and then from there we reclaimed that parabolic trend. And then guess what? We're uptrending on all time frames again, the same way that we were since here. So maybe we just run that back. Right? Rinse and repeat. So either the snowball gets bigger. Oh, well, now we're kind of chopping in a range. Well, we can contextualize that, can't we? We understand that, this discretionary adaptation. And then, oh, we're actually losing the local trend and breaking down from that local range. Maybe we're going to get a pullback into our 4-hour 200s, which look like this. Oh, and currently we have 200 dailies that look like that. That's a good inflection point, isn't it? Right? Because here's that major demand zone. That kind of thinking, right? So that's how we contextualize analysis and adapt to the volatility of the chart. There's a lot of philosophy and jokes in there and weird analogies for you in between all that. So hopefully that helps. To all the people that were asking me, how do I adapt to parabolic trend portrayals, or how do I actually go to trade them? It's up to you. You can sit here and scalp trade the 5-minute 200s and use that as a way of justifying risk and finding entries, or you can try and be a little bit more patient with, of course, with every decision-making process. For every benefit, there's a con, right? If there wasn't, then this would be easy. You just market buy your 100%, of your net worth at the Pico bottom, and you would just let it do its thing. That's not reality, though, right? You're not high stakes capital, and that's okay. So with every pro, there's a con. So just think about it. Hey, if I'm gonna not bid the 5-minute 200s here and hope that instead the 30-minute 200s pull back, right? If that's going to be my behavior, I'm going to neglect this setup in order to trade this one, then the pro is I might miss out on an unnecessary loss, right? Maybe that's the time that the parabolic trend breaks down. And I get a better entry, right? With the risk of not getting my entry at all, and then maybe the market goes higher, and now I've missed out on an opportunity. When people ask me questions, here's the thing. When people ask me questions, hey, how am I supposed to trade this? Because it feels like if I buy the 5-minute 200s, woe me, the universe is out to get me. I'm going to go buy at that time, and that time it's going to break down and give me my entry into a deeper pullback. But if, it seems like at the same time, the universe is still out to get me, the times where I don't buy that parabolic trend or that local trend or that high time frame trend, and I opt for the one higher, that's the time where we actually continue higher, right? That was the local bottom. That was the parabolic bottom, right? We continue trending higher, and I miss out. So the universe is always constantly out to get me because Mercury, if I do this, I have this pro and this con, and my brain is traumatized and can only remember this con. But the other times that I make the other decision, the other flip of the coin, I have this pro and this con, and I'm so traumatized that I can only remember the times where I've experienced this con. So what's the best option? How do I, navigate this? You just explain to me how you navigate it. That's the point. You understand the decision-making process. Play it as such. That's your system. That's your philosophy. That's your way of thinking. That's your behavior. Those are your options that you have laid out for yourself. Those are the risks for the options, in parallel degree or respectively, for whatever you have for yourself. Think about it as such. Take comfort in whatever you're going to take comfort in. Risk whatever you're going to risk, right? That's all you can do. So it's uncanny to me how many people ask me questions and answer the question in their own question. Let me read you guys what this person said in free Discord. Thanks for the update just now. I'm extremely torn between taking big profit, which would not be enough to retire, but would absolutely be life-changing money. I went all in at 16.5K with 2x leverage, no joke. I am extremely confident Bitcoin is the future, but on the other side, not taking big profit on life-changing money is, in a way, quite greedy. Any thoughts? You just wrote out my thoughts, dude. You just explained the entire process that I would have. Those are my thoughts. Yeah, on one hand, we probably go higher. But at the same time, if you're not taking advantage, you made life-changing money for yourself and you're not taking profit, even though you can change your life, isn't that fucking greedy? So, what should I do? Do I capitulate and take all my profit from my life-changing gains and then just be satisfied with what I've made for myself? Or do I sell nothing at all and continue being 200% leveraged my entire net worth since the Pico bottom and risk potentially giving back life-changing gains? What should I do? Wait, why are we only thinking in extremes? Why is it, I either leave 100% on the table or I capitulate 100%? On one hand, this life-changing money has the ability to be generational life-changing money, right? I can retire my grandkids. Well, that's different than just me retiring, isn't it? It's a different scale, right? But at the same time, it's life-changing money. Why not take it? Why is it black or white? Did we just trade a black or white market? Was it black or white for 8 months? Is it ever black and white, really? Why are we only thinking in extremes? You laid out the thought process for me. When you asked me a question, you answered your own question. If you understand the thought process, why not take comfort in it? Why not find a balance? Why not do something that reflects that thought? Act in that manner, right? Trade what you see. Trade that. It's uncanny to me. You know the answer to your question. If anything, you know the answer to your question. You just don't know it because you haven't taken the time with yourself to ponder on it. You're too busy asking some random 25-year-old internet stranger, hey, what should I do with my money? I 2x leveraged my entire net worth at 16.5K. I could do this, Mercury, or I could do this, Mercury. What do you think? What? Why do you give two fucks what I think? Do whatever's best for you. You know the thought process. Again, this is not difficult, even though it is. It's simple thought processes, right? It's very straightforward. It's very clear. We lose a local trend. Maybe we pull back into a high time frame trend. Did I just give you alpha by saying that? Hey guys, if we lose the 30-minute 200s, maybe we pull back into the 4-hour 200s, guys. Right? Oh my God, Mercury, thank you so much for this alpha. Let me give you 3 Bitcoin for your troubles. Right? Is it really anything along those lines? Hey, if we make a lower low for the first time in, a week, maybe we're going to continue breaking down thereafter. Wow, we can look for a pullback on a higher time frame. Oh my God, Mercury, thank you so much. Where do I tip you the 3 Bitcoin? I'm still wondering. Right? Did I give you alpha? No. You know the thought process. It's simple. It's straightforward. You know the pros and cons of every single button press that you make before you even make it. That's why I say, just don't be stupid. You know what is a stupid decision before you even make that decision. Hey, is it a good idea to just market long, 10x leverage your entire account on Ethereum here because we reclaimed 5-minute 200s and the analysis is we'll probably continue higher anyways? No, even though we probably continue higher anyways, that's still a stupid decision. If you die on that, it's not my fault. It's not my fault that Ethereum went into plan C. It's not. You're an idiot, right? You jumped into a pit of lava, and now you're blaming the universe that you jumped into lava after staring down the lava pit for 5 minutes prior. What? How does that make sense? So I hope this helped. Right? And I hope that I'm making you guys laugh. I'm trying to keep this entertaining because I know that I'm dragging on, right? Hour and a half of me rambling so far, and we're not even done. Mortarian, I'm gonna answer your question. So Mortarian, I need a sip of water, clearly. Give me 2 seconds. We're gonna recoup here. Mortarian says, this shit is hilarious. A million said that. Mortarian says, Mercury, just adding my question from General here again for convenience. I feel like a lot of folks might have the same question. You also cover how we could potentially adapt to the current regime when only BTC and select alts, mostly memes, seem to be running. And other alts, regardless of the trend or setup, seem to be really underperforming. Example, FTM, because they're swimming against the tide, so to speak. When it comes to others lagging on the way up, but absolutely necking when BTC retraces. Okay, so the altcoin positions that it's a valid setup because it's a valid setup. It looks good. We're going to take it. It's technically an outperformer to 95% of the rest of the market, but it's not outperforming the greatest outperformers in the market. So I think the issue that we're experiencing, Mortarian, this is a great issue to have. Let's use FTM as an example. This is a great issue to have. Now you're talking about extracting more efficient value from the market. So here's the thing. On a setup like FTM, the setup that we talked about was along these lines, right? Where we're bidding the 12-hour 200s, we're hiding stop below previous structure, and we're targeting, crazy high valuations. We're targeting 100% move, we're targeting a breakout beyond there because this is a bull market, let's dream a little, right? So maybe even to the next major resistance level. We're talking about, this kind of a move. So let's say that at very worst, you take this kind of a setup with a 15% stop loss. You're currently up, like 2.5R? So you're talking about the difference between being up only 2.5R versus being up, let's say if we took, let's just say hypothetically, right? I can't claim clout on this. I obviously gave a very, very wishy-washy kind of description on Bonk. But let's say as opposed to being up 8R, we're only up 2.5, right? The issue that you're experiencing is now maximizing your efficiency. So if this is an issue that you have, Mortarian, this is not just bullshit watered down to make you feel good, right? I'm not just blowing smoke up your ass for no good reason. You are having the right problems. You are finding yourself in winners, but now your brain is trying to tweak itself to really hone in to say, how do I win harder? That's an amazing issue to have. So I don't really think that it's that much of an issue as much as you think it is, because again, we're talking about multi-month long rallies. There's going to be ample time for all these other coins to run and to do their things and for good setups to show why they were good setups. You have to be a little bit patient there. In bull markets, a lot of the times what ends up happening is people will capitulate their positions for someone else's bag, right? So like the person who is unsatisfied with the rally on Dogecoin today, let's say, because obviously this is still extreme, don't get me wrong, but I hope that I'm getting a point across, right? Oh my god, Bonk is up 50% today, meanwhile Dogecoin's only up 10. Well, guess what? My entry on Dogecoin is right here. Well, that kind of sucks. I'm going to go, rotate my capital. Let's go out of Dogecoin, which is obviously one of the greatest performers in the market. Let's go out of Dogecoin because it's not performing as well as Bonk. And then what ends up happening is Bonk, is at this high time frame resistance, very clear, range high, whatever. And then it gets this kind of a pullback. And we're like, oh shit, that was dumb. Why did I do that? And then as Bonk is pulling back negative 13%, Dogecoin rallies 20%, right? Because it has this clear room to run or above keyed levels. And then we just continue higher, right? Whatever. So be very careful being unsatisfied with not making enough gains because you're not, trading the outperformers of the basket of the outperformers. At the same time, let's not get complacent, right? Let's not sit here and cry home to mom that we called or we caught FTM as Doge is pulling this kind of a move, as Bonk is pulling that kind of a move, as Pepe is pulling that kind of a move, right? As BTC continues breaking out and our altcoin is trading 10% higher than our initial entry 5 days ago, right? Let's not get complacent. Let's rotate our attention to other coins, to other pockets where there might be greater opportunities, even more excessive than the opportunities that we have been able to capture. And let's try and find those opportunities wherever we can, right? You heard me talk about like, oh, I missed out on this, range high retest on, range low retest on Doge. Let me try to go zoom in to find a high time frame trend on Dogecoin and then trade that instead, and then scale the assumptions to the higher time frame. Now, to my discredit, just to be transparent with you all, right? I don't have to fake it. To my discredit, I didn't know that 2-hour 200s was the high time frame trend that I was using. It only became obvious to me in hindsight. So my high time frame implication or application of a setup looked more along these lines, right? Even though the way that we drew it up on paper was literally this, and in my fantasy world, right, 4-hour 200s looked like this, and then we had confluence, right, because that was the high time frame trend that we were using, that I was using. That's what my setup looked like. That is a good example of how we would adapt to that volatility to find that new opportunity to add on to, hey, this coin is not just, it looks good and it's performing right here, right now. And it looks even better than when we initially talked about it looking good, right? Or it looks the same degree. It's pulling back into a high time frame trend. It's holding a higher low. As far as I'm concerned, Doge looks just as bullish here as it does here, as it does here. So maybe this is a good entry point, right? That concept. So that concept gets more extreme because now we probably don't have the luxury of sitting here talking about 2-hour 200s on Dogecoin, right? Because we would need negative 55% pullback from current prices in order for that to happen. I'm not saying we will never get a 2-hour 200 amaze high time frame trend. It's actually, that was 4 hour. Negative 45, right? I'm not saying we will never get a 2-hour 200 amaze retest on Dogecoin ever again. That's not the point. If we go back to the previous cycle rally, or even just any of these rallies, honestly, because these are all like their own mini cycles, aren't they? That pullback from high to low, negative 20%. This pullback from high to low, negative 40%, right? If I would have told you here, hey, Dogecoin's going to pull back into 4-hour 200s very cleanly, very easy, actually twice, with support confluence, right? And then from there, it's going to rally an additional 90%. What, Mercury? You really think that Dogecoin's going to pull back into 40%? You know who's saying that to me? The same person that when I told them, hey, Dogecoin just broke out of a 2-year range, maybe don't just target a 10% move. Maybe target, 100, 200, 300% move. What, Mercury? You really think that Dogecoin can pull that kind of a move? Don't you know that it's been trading in a range for the past 2 years? Same person, right? Same inability to think bigger. So you're going to have opportunities come your way. It's just that for Dogecoin specifically today, it's probably not logical for us to sit here and talk about 2-hour 200 amaze setups, right? Because that's a high time frame trend. Meanwhile, the actual trend is parabolic. So maybe a local trend representation, right? So we would go into what is Dogecoin trending along throughout these kinds of legs, right? And it reclaims it, and oh, look at that, that's plan A part 2, and it goes higher, and then it loses it again, and then that's where we pull back into, unbeknownst to me at the time, our high time frame trend, 2-hour 200s. Oh, and then what happens from there? It reclaims it again, and oh, that's plan A part 2. Plan A part 2 continues working for the second time in a row, and then this time, right? You get 30% move. Congratulations, Plan A Part 2 traders. If you have no idea what I'm saying when I say Plan A Part 2, I got you covered. I have a video on it. Just let me know. And then Plan A Part 2 again, right? That's not even considering, hey, I bought the Pico bottom because I turned my brain off and I just bought the higher time frame trend. That's not applicable anymore, right? So whatever that local trend is, we can say maybe 15-minute 200 moving averages is not even as applicable, even though it is. So we could honestly just continue working with 15-minute 200s because the same trend, right? Look at this trend. 15-minute 200s, and then we reclaim them, and then, oh, wow. And then we lose them, and then we pull back into higher time frame trend, and we reclaim 15-minute 200s, and we're like, oh, wow. And then we retest 15-minute 200s, and, oh, by the way, you didn't buy that test? Oh, okay, here's another opportunity. Oh, you didn't buy that one either? Oh, okay, here's another one. Oh, you didn't buy that one either? Well, here, look at this, right? This is a little tiny local range high breakout, and we're pulling back and retesting 15-minute 200s. Oh, you didn't buy that one either? Oh, okay, that's fine. Maybe this one. And then look at that. Even just from this one, you're up 20%. So it's hey, we're doing well. FTM is good, but it's only up 3R. Yeah, it's really nothing to cry home to mom about. I want to make money today. This coin, this coin, this coin, this coin, this coin, this coin, this coin are really popping off, right? FTM's doing okay, but all these other coins, man, they look fucking amazing, right? And they're actually moving. They're parabolic. They have that volatility. That trend is fresh and it's hot, man. Everyone wants a piece of this coin. Oh, but I'm sidelined. How do I trade it? What should I do? Should I capitulate my FTM position to go and trade, market buy Dogecoin instead? Should I just forget Dogecoin exists and pretend like, I don't actually care? Oh, yeah, I don't care. I don't care that I'm missing out on the entire reason that I joined this industry in the first place, right? It's neither of those two extremes. Those are both extreme ways of thinking. Let's find a little bit of a balance. Hey, I can hold on to my FTM position, and meanwhile, I can justify this amount of risk on Dogecoin. So let me go try and find trend opportunities, but on a smaller scale on Dogecoin. And who knows, maybe they'll give me, at worst, 20% moves off of a 15-minute 200 MAs pullback so that I have the luxury of complaining that my P&L is currently down negative 8% from its most recent high, right? We're justifying risk. We're saying, hey, I have this opportunity. I'm in a pretty good position. FTM is at the point where it can't hurt me anymore. No matter what happens, even if it got back down on my entry, I would be stopped out in profit well before that happened, right? That kind of luxurious of a position. Yeah, I did pretty well. Oh yeah, my spot bags are up pretty nice. Oh yeah, from those spot bags, those profits, I bought this random stupid on-chain meme coin and it ran, 3x and I made a quick buck off of that too. Oh yeah, why not take some of this profit and try and go, buy some Dogecoin along 15-minute 200s using the same trend setups, the same philosophies, the same concepts that I've been using for the past however long I've been trading and see if it works, right? And try and expose myself to the hot sectors of the market that are hot at that moment. This is just one example, right? So the 2-hour 200 MA setup that I fumbled, right? I personally fumbled. Some of you caught it. Congratulations. I fumbled it. I will always be transparent with you. I do not need to fabricate my wins. I win enough, right? The setup that I fumbled along 2-hour 200s because I missed out on the higher time frame trend, right? As a way of adapting, scale in. Doge is hot. Doge is performing well. It's one of the strongest coins in the market. We've known this for weeks now. We've known that Doge is one of the strongest coins in the market. There are ample opportunities for us to go and take trades off of it, right? How many Plan A Part 2 setups did it give us along a local trend portrayal? If you're too busy getting sidelined on your local trend, is there not a parabolic trend here? That, of course, when we're trading like this, it probably gets chopped up to infinity. But when we start to trend in a parabolic fashion again, it starts to look a little bit more like this, right? Is there not? I'm sure there is. We go to the 5-minute chart and oh, look at that. All you had to do was turn your brain off and turn the 5-minute 200s on. And then there you go. Now you're a profitable trader on Dogecoin. Like every single day, what I need you to understand, I pass up on 1,000 trade setups. Yet I'm a profitable, consistently profitable trader long term. Like I'm passing up on 1,000 trade setups. Of those 1,000 trade setups, 500 of them work, right? 500 of them get stopped out. 500 of them work, right? It is what it is. It happens. You go to buy the 5-minute 200s that time. Oh, well, that sucks to suck because we do this, right? And we stop you out, and your stop loss was right there, and this is where we stopped you out, and then we start to chop sideways and make you reconsider every single life decision that you've ever made since you were 6 years old, right? Yeah, it happens. It is what it is. But every single day, there are 1,000 trade setups. So if you want to go, hey, I'm not satisfied with my FTM position or how much exposure I have to the market or, what my current exposure today is or for this rally upwards or whatever, or I need, bigger meme coin bags. I'm underexposed to meme coins. I'm underexposed to AI. I'm underexposed to this sector. You can go find opportunities. But here's the thing. Do not think that your success is dictated by how well you trade Doge, right? Or whether or not you have Dogecoin exposure right now. Do not think that your success is dictated by, did you catch the Dogecoin rat? Oh, you didn't catch Dogecoin? Oh, you suck as a trader. You're going to spend the rest of the next year, miserable. You're going to have nothing to show for it. You're going to have only regrets, right? No, that's not how that works, right? At the same time, don't think that, hey, it's okay to just say, oh, Dogecoin doesn't exist. Yeah, sure, I'm happy with my little 2R trade on FTM, right? That's not reality. You're here to trade these kinds of markets and these kinds of moves. So you have to live a little. You have to learn to take comfort in risk, but you can't lose sight of rationale when you go to do that. You can't just all of a sudden say, oh, okay, I'm going to capitulate my FTM position to go trade Dogecoin, right? And at the same time, the other side of the extreme, you can't say, oh, well, I don't care that Dogecoin exists. I'm just going to sit happily in my FTM position, right? It's okay, FTM, you go when you're ready. We can find a little bit of a balance between the two, can't we? So hopefully you can. So learn to justify risk, take comfort in that risk, because here's the thing. If you weren't satisfied with your FTM exposure, you wouldn't be having these thoughts. Or if you were satisfied with your FTM exposure, or your Bitcoin spot bags, or your meme coin, phantom wallet performance, if you were satisfied with that exposure, you wouldn't be sitting here saying, hey, Mercury, what about Dogecoin when it starts to rally really hard and I'm sitting in an FTM trade? Like, how do I rotate? Because if you were satisfied in the other regards, you wouldn't be so worried about Dogecoin. So the fact that you're worried about it means that there's maybe a little bit more room for exposure in your portfolio or in your mind, right? Maybe there's no more room for exposure in your mind or in your portfolio, but you're 18 years old and you live in your parents' basement and you have the world in front of you, so you have the ability to take a little bit higher of a risk appetite, right? That's how I would kind of think about that. So we have the luxury of going and venturing off into, hey, let me go trade Dogecoin along 15-minute 200s, right? Something along those lines. Don't get lost in the sauce, because here's the inevitable. I know that I just said that and some of you are laughing right now. But seriously, don't get lost in the sauce. Don't lose sight of all the rationale and the level-headed mindset that got you here in the first place, because you will end up like the other 95% of traders that walk out of a bull market and have nothing to show for it except regrets, right? Oh yeah, they ran 10,000 to a million and they ended up walking away with 50K, right? That 50K is still enough for them to want to continue, grinding throughout the bear market, but reality sets in, and throughout the course of a 5-month-long range at bear market lows, that 50K probably turns into 30, right? Suddenly it's not that cool of a story, right? Don't get lost in the sauce. Here's the inevitable truth that you're going to run into 100% of the time. Every time that you get stopped out of a position, you risk too much. Every time that you are winning on a position, you didn't risk enough. I don't care if at 57K, when I start screaming at you the same way that I have been for the past 2 hours through this monitor, at 57K, you took my words literally and you said, oh, Mercury's bullish again. All right, refinance the house, babe. Sorry. Oh, this jewelry that you have, yep, gotta liquidate it. Sorry, need to afford more Bitcoin. And then you took that Bitcoin, you took those funds, you bought Bitcoin with it, and then in addition to that, you opened up a 3x leverage long, right? So you're long 3x your entire net worth on Bitcoin at 57K. It's currently 92,000, right? You're up a shit ton of money. You know what you're thinking at that time? I should have risked more. Why did I do 3x leverage and not 5x? I'm an idiot. It was so obvious. I should have done 5x leverage. Oh, yeah. You go to take a 15-minute 200 amaze Dogecoin setup, and you're like, yeah, you know what? This little bit of exposure, these little bit of profits, yeah, sure, I can justify that. Yeah, because you know what? Maybe Dogecoin, upon 15-minute 200 MA pullback, right, which is still relevant today, maybe 15-minute 200 MAs, maybe that pullback leads to, a 45% move. So that'd be pretty cool, right? Maybe I should go trade Dogecoin. What would a 45% move look like? Yeah, at the same time, it's 15-minute 200s. Maybe it breaks down, but I'm doing pretty well. I'm doing pretty good. I'm on a hot streak right now. My spot bags are up. My on-chain, meme coin, phantom wallet, whatever, it looks pretty damn good. I ran it up, 10x in the past 2 months or so. Man, yeah, I could justify the risk. When you get stopped out on that Dogecoin trade, and it looks like this, and then suddenly your spot bags are down a little bit less, and then maybe you're getting stopped out on another trade that you justified exposure for, And now instead of your phantom wallet being up, 10x, it's only up 9x or maybe 8x. Now it's, damn it, I was an idiot. Why did I risk that much in that Dogecoin trade? Fuck. You're always going to feel this way. You are always going to feel this way. I don't care if you 3x leverage long your entire net worth at $57,000 Bitcoin. It's currently trading at 92. You are always going to feel like, damn it, why didn't I do 5x leverage? Why did I only do 3? And the inverse is true too. So we need to be comfortable and understand within ourselves. I can't tell you what the difference is for you. I know what the difference is for me. I know what the difference is between, hey, this is the inevitable greed that kicks in versus, hey, I'm truly not exposed enough, right? For the past 2 months, Computer Brain has asked me almost every other stream, hey, how many trades have you taken? Like, have you actually like taken action, or are you still just kind of passive about it? Guys, in the past month, I've taken a few trades. One of them was Solana. One of them was I tried to set limit for Dogecoin. I didn't get hit. I took Phantom. I took something else, and I've been actually pretty active and on chain. I have been doing well there. I can't lie. A lot of it due to Maverick. Shout out to him. And a few friends that I have. That's been like the most execution that I've had. You know why? Because I'm very satisfied with the exposure that I have. I don't really, I haven't even taken much profit. I clearly, I have tweets saying, people want me to take profit mid-range or range highs. I want you to learn how to dream, right? I haven't taken profits. I'm still very satisfied with the amount of exposure that I have. Oh, so Mercury, you're Marcus Aurelius, and you're not sitting there like, damn it, I should have risked even more of my Bitcoin or my net worth on Bitcoin at 57K. No, I absolutely am. But then when I rationalize it, I go actually look at my portfolio, I go actually look at my exposure, I go actually look at my ledger account, which I'm refraining from looking at, right? Because it's probably in my best interest to do so, if I'm being honest. When I actually go look at that stuff, I'm like, oh, this is just the inevitable, hey, I'm up a lot, but I could be up a lot more. That's an inescapable truth, right? It's going to happen anyways, so that's just that, right? It's just greed kicking in. It's not real. It's not that I'm actually underexposed. It's just, I'm human, right? So it kicks in and then it immediately goes away. And I go back to reality. Reality is I'm very comfortably positioned. I'm very heavily exposed to this market in several different aspects on several different coins. I feel pretty damn good. I can't even justify going and trading Dogecoin on the 15-minute 200s. I can't justify it. Oh, but if it gives me a pullback into 2-hour 200s, by that time I will have taken profit. I will have scaled out of local trend losses. I will have, my TP levels will have gotten hit maybe. Oh, and then by the time that happens, I'll have more room for exposure. And then I can justify taking that Dogecoin setup along 2-hour 200s, right? That's how that works for me. So I'm not succumbing to the inevitables. I am being real with myself. I know exactly where I stand. I know exactly how I'm positioned. I know exactly what I'm exposed for. I know exactly where I want to take profit. I know exactly where I want to start to cut out. I know exactly what I want to do regardless of the situation, and I feel comfortable, right? Something that I was actually telling my wife the other day, just on the topic of being comfortable, that is that point, right? That is the point there. But to kind of branch off into a different topic about being comfortable, this is the potential for a system, and a system that is tried and true, and what experience can do for you, and how invaluable experience can be over time. Please, oh please, know the basis, the premise behind this quote, because I'm going to absolutely butcher it again, and I might need someone's help, as I did last live stream. People tend to underestimate what they can accomplish in 10 years and drastically overestimate what they can accomplish in 1 year. Again, I think that's kind of like a law to the universe, right? It's definitely what I found when I entered crypto. I said, oh, okay, I'm going to 100x my net worth in not even a year, right? I was thinking shorter than a year. Come back 7 years later, man, I should have just been playing the long-term route. Because this is a conversation that my wife and I had the other day. I told her, hey, just so you know, I might be in my own head a lot. The market's crazy right now, and this is a greater opportunity than, we've ever seen before. Thankfully, I'm positioned for it, whatever, but I have to be in my own head. I have to be making sure that I'm giving, like Blockzilla said, bull market stress hits different. It's not even really that I'm stressed out, it's that I'm in my own head. There's a lot of deep thought that needs to go into how I want to remain positioned. If this occurs, how am I going to account for that? If, this position gets stopped out, where am I going to rotate exposure? If this take profit hits, am I going to compound that trade, or am I going to just keep letting it run? The questions that you guys ask me in chat, I ask myself on a daily basis. Do you understand that? Please start asking yourself those questions. That is not me saying, hey, I'm lazy, I'm so sick and tired of answering your questions. That's not that. You can keep asking me your questions, but a lot of the times I'm going to say, this is probably better if you ask yourself this, right? So I was telling my wife, I'm going to be in my own head a lot. The other day I woke up and I started scrolling my phone. I'm not kidding you. I started scrolling my phone and 2 hours had gone by. I've not done that in a year. I have not woken up and not immediately, as soon as I wake up and look at my phone, see what time it is. All right, pup, let's go outside, right? All right, let's go. Let's start the day. I've not done that in a year. I've not laid in bed and just lounged, right? Just to lounge and scroll on my phone in a year. I've not done that. I did it the other day. I was so in my own head. I got so lost in the chat in this Discord. I got so lost in all my replies and all the notifications and scrolling my crypto Twitter timeline and trying to think of a funny meme to post and whatever, right? I got so lost in that 2 hours had gone by just because I was in my own head. And I told her, I said, just so you know, that's going to happen a little bit more frequently. I'm going to be in my own head. Obviously I'm sitting in a computer chair, I'm sitting on the couch, I'm still thinking about crypto, I'm still thinking about the market, I'm still thinking about, my trades and all that kind of stuff. But that's mentally draining. I'm giving a lot of mental effort towards that thing. Even though what you see on the outside is me just laying on the couch, please know that I am allocating a lot of mental energy towards this aspect, more than what you've seen me do in the past 2 years, right? I knew this was coming. You knew this was coming because I've been telling you for the past 2 months this is probably coming. And now it's here. And so I just want to reiterate, I'm going to be in my own head a lot. If I'm not acting like myself, just try and get me snapped back out into reality. But you just got to bear with me. You just got to show me a little bit of patience. And she's like, okay, that's fine. She's very understanding. That's why I married this woman, right? Very understanding. Yeah, that's fine. No big deal. But I just want to make sure that you're not stressed out. That's what she was worried about, Blockzilla. I just want to make sure that you're not stressed out. Blockzilla came into the stream today and said, bull market stress hits different. My response to her was, I'm not stressed out. If anything, I am working with the most monetary amount, right? The most money that I've ever been working with. My trades are positioned the most in terms of monetary amount, high conviction, right? Several standard deviations out farther on the risk curve than I've ever been. My UPNL is greater than ever before. This is the market environment that I'm working with. This is how I'm operating. And yet, I have never felt more comfortable trading markets. I have never felt more at peace with how I'm positioned. I have never felt more graceful in my execution. I've never felt that before. Not as much as today. Even though you asked me 3 months ago in the middle of a weekly downtrend that was at the same time inside of a 5-month-long range that at the same time was locally uptrending along the hourly chart, yeah, I feel pretty comfortable. I understand the analysis. I can break it down. I know what this puzzle piece is doing. I know what this puzzle piece is doing. I know how to adapt. I know what to look for next. I know what to anticipate, right? It's not that I'm hedging myself. Oh, hey guys, we might go up, but we might go down too. It's, hey, if we do this, then we probably go up. But in the meantime, I'm going to anticipate that we continue going down, right? Yeah, I still feel comfortable. I don't know what's going to happen next. I don't. The reason we can extract value from markets is because none of us knows what happened next or what might happen next. So I don't know what happens next any more than I ever have. At any given time, I've always told you guys, and this is the truth, not just because I'm Marcus Aurelius, right? I'm the most stoic motherfucker on this planet. No, that's not how that works. I feel comfortable at any given time in the market. Market exists, I exist. Listen, I'm going to figure it out. I'm going to find a way. I'm operating with the most amount of money that I've ever operated with ever before. My UPNL is crazy in the high, in the clouds more than ever before. And I feel the most comfort and the most peace than ever before. That is the long-term goal. I didn't know that this was possible. I didn't. I hope that it's not me being delusional and me just being kind of lulled into, hey, you're right, like I have rose-colored lenses and everything is great right now. And then, because I'm so high up in the clouds, reality kicks in, we come back down to gravity, and then, obviously we have momentum because I was so high up in the clouds that I come back down and crash into a valley. That hasn't happened in the past 4 years for me, so I can't see why it would happen today. Even if, trends start to break down, we top out, whatever, right? Your greatest fear comes into reality. My peace derives from the fact that even if that were to occur, I still make out exceptionally. There is so much comfort and peace in knowing that. That is my edge. That is why I will continue to do well. I'm operating gracefully. I'm comfortable. I hope that we can resonate with this, or that eventually sooner than later, hopefully, you can resonate with that. But that has been my experience, and I'm here to talk about my experiences as well, right? All right, Mortarian follow-up. Sorry, I know that I went on several tangents before, coming back to your question. Mortarian says, haha, I actually took the hourly trend retest setup on FTM at 75 cents and then got stopped out on a wick. That's unfortunate for you. I'm sorry. Trying to combat the mental trauma from the past several months in these scenarios, by refraining from taking the same trade twice, the best adaptation I can make is to watch and bid if we get the 12-hour trend retest. So here's the thing, Mortarian. When I say my personal rule is I won't take the same trade setup twice. So if you're buying, if you're buying 75 cents, is it this test or is it the one prior? Which local trend are you talking about? I hope that you're still here.
Hello? Yeah, it was the first one.
The first one? This one?
Wait, no, the second one.
This one?
Yeah, yep.
Okay, beautiful. So what I'm talking about when I say don't take the same trade setup twice, yes, in this case, I would turn my brain off and say, okay, I'm going to divert my attention to whatever the next highest time frame trend is, and then go from there. So maybe instead of like 12-hour 200s, it might not be that extreme. Maybe it is with the way that this is kind of crunched up. It's kind of, it's contextual. It's kind of bullshitty. Because maybe high time frame trend and very high time frame trend are roughly the same region. So generally, we're going to say this is very high time frame trend. Now let's see where our high time frame trend is, 4-hour 200s. And so it's actually here, right? So in this case, what I would do is, I got stopped out on this setup, and then divert my attention to the next one. If we're going to get even more contextualized about this, and is it even 4-hour 200s? Yeah, I think it is. If we're going to get even more contextualized about this, what I want you to start thinking about is, especially in this case, is my local trend confluent more or less with my high time frame trend, with the time frame trend higher than it? Because if so, I want to try and account for both. So in this case, instead of bidding hourly 200s and trading it outright as a local trend setup, we might want to trade local trend plus high time frame trend confluence generally because notice that as you're getting stopped out on your local trend trade, literally negative 4% later, you have to account for your high time frame trend. So why not take just more of like a generalized entry as a whole? So we can say maybe something that looks like this, and then hide stop below some kind of structural interpretation that accounts for not just hourly 200s, but also 4-hour 200s. And then maybe our stop loss goes to this. And so that way we're refraining from an unnecessary stop out because we're not so honed in on just the hourly market structure, right? And so then our trade setup would look like that. And then hopefully that trade works out. If that trade doesn't work out, then yes, we would divert our attention, or at least I would divert my attention to those 12-hour 200 moving averages. So that's kind of the laddering of events. But now I'm going to take not FTM as an example. We're going to pretend like I didn't just say any of that. And we're just going to go face value. Hey, there's no high time frame trend here. It's all the way down here is our 4-hour 200s, right? So that's irrelevant. Right? Everything I just said was irrelevant, even though it's, in this case, that's actually how I would go approach this chart with that setup, right, in mind. That's irrelevant, though. We're looking for hourly trend per trail, and then here's our bid, here's our entry. Oh, we got stopped out because maybe we're hiding, market structure right here, in which case that's unfortunate. You got stopped out on a wick, right, at the literal pico bottom, and then we start to make you, reevaluate every single decision you've ever made for the past 6 years. Hourly 200s get reclaimed because of, one, we're at a range high, a massive range high. That's one. And two, Mercury has a very hard set rule set in stone. I cannot take the same trade setup twice. I don't allow myself to do that. The only thing worse than getting stopped out at the literal pico bottom here on FTM is bidding the exact same setup on the exact same concept and the exact same philosophy, and then getting stopped out again, right? That's the only thing worse than getting stopped out here on a fluke, is getting stopped out on the same trade setup twice. Even though you're only still down negative 2R in your portfolio, you feel as though you are down negative 20. At least I feel as though I am down negative 20. So my adaptation to this would instead be, let me look for something that gives me a different kind of a setup to it. So as opposed to, let's bid hourly 200s local trend and assume that this is going to be the trend on this leg upwards that breaks us out of the range, right? You hear the kind of premise behind the analysis, the reasoning behind it. I can explain it to you and we can break it down. Okay, so hourly 200s, we're going to pull back into them, and then from there we're going to break out of a multi-month long range, and then we're going to go into a very, very trendy, environment thereafter. Well, I tried to take that trade. I got stopped out. It's triggering the same idea once again, but we're at range highs. I don't really want to take it again, and I'm not going to take the same trade twice because that's going to be really, really tilting if I lose in the same setup twice in a row. What if this market looks like this, though? What if the hourly 200s, now we're giving you this setup? Same concept, right? But it's a different trade. It is now a breakout reclaim of a very high time frame range, and we're using local trend as a way of scaling assumptions and finding a more pinpoint accurate entry rather than saying, oh yeah, this is a 2 or 3 month long range, so I need daily market structure to do this, that, and then go from there, right? I need to be able to call my grandmother right here and say, hey, Graham, this is a daily candle, daily candle, daily candle, daily candle, daily candle, daily candle. Hey, Graham, maybe some point in, this week, maybe bid FTM because it looks like it's breaking out of a 3 month long range. Instead of doing that, we're using hourly 200s to say, hey, we're breaking out of this high time frame range. This is a different setup now. It's the same concept, it's the same premise, but it's a different setup. It's more valid. It has a higher probability, at least the way that we would perceive it, to play out this time. It's kind of a different setup at that point, isn't it? It's not that, hey, we got stopped out on hourly 200s and, oh, look, we're back above hourly 200s. Bid it again, right? 1, 2. It is now, hey, we've done something significant. In addition to this, let's not pretend that there isn't some kind of additional adaptation here to be made. We can go into maybe a 15-minute time frame and contextualize it and make even more actionable analysis for ourselves. So instead of just outright bidding hourly 200s, perhaps we want to wait for the 15-minute 200s to get reclaimed, and that's going to be our actionable trigger that says, hey, this setup that looks like this, right, and is looking for continuation after having tested our local trend and then potentially looking to expand away from this range, is a different setup than just outright bidding the local trend and hoping that we reclaim and then break out from there. Those are two different trade setups. So we're still pouncing on the opportunities that FTM is providing us, but we're curving like how much FTM is able to tilt us emotionally. That's how I'm balancing those two factors. Does that help?
100%, man. Thanks for the explanation.
Yeah, anytime. Darklight, I appreciate you sending the video, Plan A Part 2, that kind of stuff. I appreciate that. Thank you very much. All right. So, we got 26 people in here, man. This is the most amount of people watching live in, I think, like a year. So, is there anything that you guys want from me? Any chart requests, any questions, any comments, you want to tell me how your day is going? Whatever you want. We've been at it for 2 hours. Typically, I am willing to stay here for up to 3. Right? If I'm feeling generous, 3.5. Right? If I get lost in my own sauce and start really ranting, if it's a good topic, you can get me for an extra 30 minutes after 3 hours. Fib levels for Pepe. That's an easy one. So for these fibs, I would just ask myself, I get this question a lot, so we're going to quickly cover this. Make sure that you are reasoning with yourself, why am I drawing this fib as opposed to this fib, as opposed to this fib, as opposed to that fib, as opposed to that fib? Because here's the reality. How do you draw fibs? You take a high and you draw to a low, and then that gives you a fib extension to the upside. So could we not theoretically draw this high to this low? Right? We absolutely could. But you have to be able to justify it. Oh, I'm going to justify this because this is the initial impulsive high and then the next, subsequent low, right? But could we not also draw from this high to that low? You absolutely could. But wait, while we're at it, Mercury, why not draw from this high to then this low? Wait, but what about Mercury? What about this high to that low? But what about this high to that low? What about this high to that? Exactly. Every single one is quote unquote valid. So how are you going to rationalize, why am I drawing this fib extension as opposed to drawing the next one, right? How are you going to rationalize that? Some of you might say, no, I actually like this fib extension. I'm going to use the impulsive high, the initial impulse, that high, to the next subsequent low, and then I'm going to go from there. And that gives me 1.618. Look at that, 2.618. Wow, Pico top. I, in this case, am going to take a different spin on it. I'm going to say, I'm going to take the previous all-time high and the next low thereafter, and then those are going to be my fib extensions. So whether you want to use this one or this one, or this one to this one, or this one to this one, they're both valid because guess what? You're targeting magic numbers in the sky, right? These are not resistance levels. I know that the 2.618 just acted as a Pico, beautiful top for at least the hourly time frame. I get it, but these are not resistance levels. They're magic numbers in the sky so that you can allow yourself to gradually take profit out of the market because you understand a simple fact. You cannot profit from this market unless you take profit, whilst at the same time being an absolute fucking moon boy the way that you should be, because this market threatens a move, I don't know, maybe like that, right? And so, yes, whilst I might be taking profit at this high to this low kind of structure, oh yeah, here's my 1.618, 2.618, 3.618, 4.236, 6.85 is a macro top, right? Yes, I'm still targeting the 11.09, which also ends up being a macro top. Yes, I'm still targeting infinity. Yes, I'm still a moon boy. Yes, I'm still So we're balancing those two aspects, right? So as long as you have some kind of consistent way of rationalizing why am I drawing this fib as opposed to the other infinite fibs that I could have drawn. There's a million fibs on the chart that you could draw. Why are you drawing that one as opposed to any of the other 9 million of them? Oh, because this is the previous cycle all-time high into the subsequent, macro low. Oh, okay, that makes sense, Mercury. Hey, but Mercury, why not use the impulsive high into the next subsequent low? Well, I don't know. Why not, right? Why not? That's the way that you see it. So if that's the way that you see it, that's the one that you feel you should use, then that's the one that you will repetitively, consistently use, right? Your brain will still, on the next chart, you're going to magnetize probably to the impulsive high that looks like this to that low, whereas my brain might magnetize towards the new all-time high to the next low, right? Just because we're two different people and we see two different things, we're applying the same ideas though. So my fib extensions are this. Sorry, Edmund. I know it took me a year to answer your question. I love to talk, and you know that. I've been watching these streams for 5 years now. But these are my fib extensions. So you can, just take a quick screen grab. I'll move my cursor off the screen so you can see it. These are my fib extensions for Pepe. You could also use this one. I would not hate you for it. I see the reasoning to want to use this one as well. Right? No big deal. It's the same concept. That's what matters. Aqua G says, hey Merc, thoughts please on having your stop losses larger in these conditions. So more towards high time frame, but entries around low time frame. I think that is a strategy that works until it doesn't. And then when it doesn't work anymore, you give back all your profit that you had. So here's the thing. Don't try and get cute with the market. Don't try it. Because every person that has ever gotten cute with the market is not trading markets anymore. Because they got absolutely obliterated, right? So if you're going to trade, I'm going to give you an extreme example, Aqua G, because if I'm going to give you an extreme example, you can understand the point that I'm trying to make, and then you can give yourself a more rational, level-headed example when you go to trade whatever it is that you actually are trying to implement that thought onto. So here's the extreme example, right? 15-minute 200 moving averages on Pepe. Wow, look at this trend. Oh my God, it's so clean. This 15-minute 200 MA's trend accounts for a whopping 170% rally. Hey, this is cool. I want to buy 15-minute 200s on Pepe because, that's the trend. I need to adapt. I need to adjust to volatility. Mercury has been yapping this whole stream about how I need to adapt to volatility and adapt and zoom into local trend and parabolic trend, blah, 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 blah. Here's me doing that. But what if Pepe breaks down below these 15-minute 200s, right? And it starts to pull back a little bit. Or maybe I get stopped out in a wick, because we didn't hold a market structure low and instead we start to chop up in a range. And then from that range, we expand. So, how do I mitigate that? How do I make sure that I'm not going to get stopped out in a fluke of a pullback of losing 15-minute 200s just to continue higher anyways, or getting chopped up or getting wicked out, right? At the Pico bottom right before a 50% rally. How do I make sure that doesn't happen? Oh, I know. I'm going to hide my stop loss below high time frame trends. So here's my 15-minute 200 MA's entry, right? And then where is my high time frame trend invalidation? Let's see. What was the high time frame trend that we were talking about for Pepe? Oh yeah, 12-hour 200 moving averages. Yeah, high time frame trend, high time frame trend, high time frame trend. Okay. Hey, look at that. You're up 2.5 R on Pepe. Congratulations. You had a banger of a setup, didn't you? You're up 60% on Pepe. Congrats, dude. That's awesome. What happens the time when you go to implement, hey, 15-minute 200s, and your stop loss is negative 30% away, right? All the way down there. By the time that we get down here, you have given back whatever profit that you've made on this 15-minute 200 MA's test, that one, that one, that one, this one. That one time, right? Your P&L looks like this. It's like, oh my God, wow. And then you're allowing yourself to give it all back. And then here's the thing here's the treacherous state that this puts you in. and the state of mind that it puts you in is really what I'm referring to. It becomes, oh, the 15-minute 200s got stopped out on Pepe? Oh, that's okay. No big deal, because look, right? This is a little local range high, and this even has high time frame relevance, doesn't? Oh yeah, that's a massive resistance level that we're going to look to flip into support. Oh yeah, those are the 4-hour 200s that Mercury was talking about. Wait, so why would I cut here at 15-minute 200s when literally negative 15% later, I get to bid 4-hour 200s? That seems like overcomplicating at that point. I don't trust my own execution enough. I'd rather just hope and pray that the 4-hour 200s hold. And the 4-hour 200s don't hold. Oh, Mercury, your trend system, man, it fucking sucks. But you know what? I'm going to still try at it. I'm going to give it another go. Now we're pulling back into 12-hour 200s, right? So why would I cut because we're losing 4-hour 200s? Because literally, negative 8% later, we're at 12-hour 200s and then massive range low confluence, and then that's a major inflection point on like a weekly time frame. And then, yeah, why would I do that? It doesn't make any sense. So you know what? I'll wait until after we break down below that region before I really start to cut. And then we start to break down, right? And then you're like, oh, damn, this looks really fucking bad. You know what though? Now we're losing 12-hour 200s, but it doesn't really make sense for me to cut here. At this point, I am already down. People tell themselves this. You have told yourself this at some point in your crypto career. I know it because I have told myself this 1,000 times. I know it. Don't make the same mistakes that I did. You don't live a long enough life to make every mistake in the book and then learn from it. So you have to learn from other people's mistakes, right? In order to speed up that learning curve process. I've done this 1,000 times before. Listen to how stupid this sounds and know that you have said this to yourself before. At this point, I'm already down negative 40%. What does another negative 10% do for me? You know, it's not really that bad. You know, it is what it is. I'm already down this much. Why not just let it be a bag, right? Maybe it comes back to life in the next bull market. I mean, at this point, we're trading pretty damn close to these massive range lows, and then we break down below those range lows. And then what happens? Oh, does Pepe, does it have good fundamentals? Wait, what's the Telegram community looking like? Is it a good Telegram community? Like, are people active in there? Do they actually provide value, or, you know? Hey, the founder, is he known? Did he go to Berkeley? Did he graduate from Stanford? Like what's his credentials? Like is he good? Does he know his shit? Or, oh yeah. Now we're Telegram community members. Look back 2 months ago. You were trading 15-minute 200s, dude. What happened? I gave you an extreme example so that any more balanced, more realistic example, even though I myself have succumbed to the extreme example 17 million times over, right? And you probably have too. Let's just be honest with ourselves. Even though that's the extreme example, you should be able to break it down and bring it back down to earth and say, okay, I get the point, right? Maybe don't try and use high time frame trends. And here's where everything in markets is a fucking rabbit hole. And every single time that I open my mouth to talk, I'm contradicting myself, right? Oh yeah, make sure that, hey Mortarian, make sure that when you're bidding FTM there on hourly 200s, you're also accounting for negative 4% lower is the high time frame trend as well, right? So maybe don't just outright bid the local trend, because you're leaving yourself susceptible to a little bit tiny of a fluke, right? And then we test high time frame trend, and that was actually the bottom, and now you don't know what to do, and you're kind of whipsawed, and you feel a little bit tilted, and now you're going to revenge trade, and blah, blah, blah. All you had to do was zoom out a little bit and account for that additional negative 3% region, and then there you go, right? Now you wouldn't have been stopped out, now you're in profit on that trade. Oh, hey, Aqua G, make sure that you're not playing a local trend, but then accounting for a high time frame trend negative 20% lower. You have to use your discretion. So if 15-minute 200s are right here, and it just so happens to be that the way this is shaped up, 12-hour 200s are right here as well, then by the time that I go to play my 15-minute 200s, I might account for my 12-hour 200s as well, so that I can just lump it all together as one cohesive swing long trade. and I'm trying to use 15-minute 200s as a way of pinpoint precising that entry, but I am overall accounting for that higher time frame aspect, the context to the situation, right? I'm not just outright trading 15-minute 200s, because in that context, using my discretion, it doesn't really make sense to just hone in on 15-minute 200s. But if 15-minute 200s are right here, and you go to bid them, and your high time frame trend is all the way down here, maybe don't bid here, but then hide stop all the way below this structure and that high time frame trend. That doesn't make any fucking sense. It's a way to lull yourself into complacency and then end up as a Telegram, community member. So that's the exact opposite of how we want to end up, right? We want to dump our bags and walk away when the time is right, and then have, ample wealth to then compound on what might be a lower high, 40% rally thereafter. Still incredibly luxurious. That's what we want to do. We don't want to end up, holding bags. So there's a very clear difference. Even though it's the same concept and I just contradicted myself, there is a very clear difference between, hey, this is within the same general region as this, so why not account for that too, right? To try and mitigate some, choppiness so that you're not getting stopped out on, meaningless kinds of moves, right? Versus, hey, I'm bidding the 15-minute 200s, but my fear is that I get stopped out, so I'm going to hide stop loss negative 30% lower behind my daily market structure. What? That doesn't make any sense, right? Now we're just being emotional about it. Now we are going very extreme, and we're trying to find ways to justify risk, and eventually what ends up happening is the trend breaks down at some point, as it inevitably will. Fidget spinners were never going to be cool forever. Sorry to break it to you, right? The trend is going to break. It's going to happen. You don't want to be the person bag holding a negative 40% pullback, waiting for, is the daily market structure going to break? When you initially entered off of local trend portrayals, right? You don't want to be that person. So there's a very clear difference between the two. I would hope that my very extreme, kiddish example where I'm yelling at you very much defines what the difference is, but you have to use your own discretion to dictate what that is. So there are times where you want to account for that higher time frame trend, because why not? And there are times where it makes absolutely no sense to, because it's losing philosophy that will more than likely cause you to lose at the end, right? Mortarian says, could you take a look at Jupe and Radium? I think they're both strong SOL beta coins that look very good on high time frames. Okay, let's take a look at Jupe. I need a sip of water, guys. I'm ranting like crazy today. This bull market stuff, huh? I should probably start implementing like some 5-minute breaks here. Go stretch my legs. Right? Probably should do that. All right. So Jupiter, the way that I have this drawn, it's at resistance in my humble opinion. But I am seeing the appeal to a potential breakout. So it's not to say that this is the only levels to work with. I do think that there's a level here that I just don't have drawn. Okay. Now we can try to find some kind of very high time frame trend portrayal. I don't know that we will find one, to be completely honest. Just because this coin has only existed for so long. But let's try, right? Maybe 8-hour 200s. I think we can do better than that. Maybe 6-hour. So I think we're going away from very high time frame concepts. I think the very high time frame concept is that more or less we've been trading in this general sideways zone, right? And then now we're moving into high time frame. So still high time frame, but not, a 8-month long kind of thing. So not that contextual outlook, but still high time frame. So it's not 6-hour, I would say. Maybe it's 4-hour. This might be about as good as we're able to do, but let's keep going just for shits and giggles, right? Maybe 3-hour. I actually do kind of like this a little bit more. Oh, maybe not actually, because of local relevancy. So I want to find something ideally that is historically relevant and locally relevant, but it seems to be that Jupiter is not going to be nice enough to us to give us both. So I think we kind of have to prioritize local relevancy here, in which case I do want to find something that does portray as many lows as possible. And then from there, we can contextualize it and find lower time frame kind of price movements along more actionable trend portrayals. So basically what I'm saying is 4-hour 200s high time frame trend. More or less, this is pretty damn solid. If the concept here is bid the range high breakout of a multi-month long range along with high time frame trend confluence, then maybe we get stopped out here because I truthfully would have done scaling of assumptions and then you would get stopped out on a wick. So that's unfortunate. Technically, stop loss should be there. So this is just bad luck. It is a byproduct of trying to pull a fast one on the market. That's what we get, right? It's still my winning philosophy, but it is going to happen sometimes, right? It's just going to happen. You're going to scale assumptions and say, you know what? If I had my stop here, I'll probably get stopped out on that position anyways. That's truthfully my thought. So I'm trying to be as transparent as possible. It's going to happen. You would get stopped out, and then obviously this would not have gotten stopped out. So the technical trader who's like, actually, that's the market structure that I need to be using, right? He wins. He wins. He's not up a ton because his RR is not that great, but he won in that regard. So long term, that doesn't affect how I will continue to trade the market though. But it does mean more or less in hindsight, we can generalize it. Yeah, 4-hour 200s was the trend that we were supposed to be using, right? It did work. It's just that, technically the way that we drew it up and tried to pull a fast one on the market, it would not have worked. If we zoom out, all you have to do is zoom out. Squint your eyes a little bit. Oh yeah, this is clearly a trend along 4-hour 200s, isn't it? And that's why we call it the way it is, right? So this is now as much of a bullish retest, the same way that that is a bearish retest. You kind of see the point there. That's how I'm using my discretion. Please understand, I'm not using these moving averages as pinpoint pico bottom entries. I'm using them as general portrayals for an overall trend, right? So it's a cloud. Somewhere in this general region, I'm thinking that we're going to find support. So moving forward, the setup on Jupiter would be, because we have not expanded away from this massive region yet, the setup on Jupiter, I should draw this. The setup on Jupiter is, I'm going to bid this like 4-hour previously resistance level along with what might be high time frame trend confluence. And then I'm going to bet on, I need something to happen, right? I'm going to bet on the expansion away from a 7-month long range. That's the concept that I can see coming into fruition on Jupiter. In the meantime, we have an inevitable fear, right? Our fear is, Mercury, what if I don't get my pullback into 4-hour 200s? If you're not going to get your pullback, you have to have seen it coming. The market has to have told you, hey, we're not going down anymore. You might not get your bids. We're starting to go up now, right? It does that via more actionable analysis. So maybe a local trend portrayal, right? Or maybe some kind of local resistance level that we can define that says, hey, in addition to this local trend, now we are, reclaiming this little range high or range low or whatever, right? 15-minute hourly resistance level. We're probably going to continue plan A part 2 from here. So we contextualize it even further. We have 4-hour 200s high time frame trend. We know what the setup looks like, rough draft around that region. We have confluence as support. We have structure, interpretation, totally fine, higher highs, higher lows. So we have a valid setup that may or may not come into fruition. Beautiful. We need a backup plan so that we're not driving ourselves insane. Did I miss out on my Jupiter bids? Did I miss out? Did I miss out? Did I miss out? No, actually, you got your bids and then some. You actually ended up getting stopped out on a fluke. So how dumb does it feel to sit here and have freaked out about, oh my God, was that the bottom? Was that the bottom? Was that the bottom? Was that the bottom? Oh, I just got stopped out. Oh, I got stopped out at the bottom, right? It feels stupid. So let's curve that. Let's make sure that we're not succumbing to that as much as possible. So we do that, contextualize it, add more detail. give ourselves a more actionable analysis, local trend portrayal. What is our local trend portrayal? We might say hourly 200s. I do feel as though that is a pretty good local trend. So now we can break this down, right? Hourly 200s gave us a setup, whereas 4-hour 200s traders, high time frame swing longers were kind of sidelined, right? So the local trend trade so far is working. So it's actually, we need to contextualize it even further. So maybe there was never a reason for us to talk about our 4-hour 200s, which are at that time, they were all the way down here, confluent with this support level. Maybe there was never a reason to talk about that because we never lost our local trend, right? The only time when we did pull back into 4-hour 200s so that we could stop Mercury out because he tried to get cute and pull a fast one on the market. When we did do that, it was because we lost the hourly 200s. Prior to that, it was because we lost the hourly 200s. When we reclaimed the hourly 200s, we continued trending. Hey, we were above the hour 200s. What happens? We continue trending. We pulled back into the hourly 200s. Hey, I don't know. Maybe that's a good reason to buy the pullback, right? So maybe we don't even ever get to the point where we're talking about the higher time frame trend, at least not yet, right? Or if we are so hyper fixated on buying the high time frame trend, that's the only way that we can justify exposure on Jupiter, we're at least not anticipating that it's gonna happen here today or sometime soon, right? Because we need to break down below the local trend first. That has to happen. The snowball has to compound in order for us to even potentially get our entries. Jupiter is, we can scale it to another degree, right? The farther side of the extreme. It's not just local trend, it's not just high time frame, it's also parabolic, right? Because look how long hourly 200s are rendered irrelevant over the course of, or what encompasses, 35% of price action. So what's causing that 35%? If we never even got a setup, our hourly 200 MAs retest this time around might have gotten front ran a little bit, right? So what's allowing us to continue trending? Our parabolic trend portrayal, maybe 15-minute 200 moving averages. So now this is helping us understand, hey, that hourly 200 MAs test, that was your pullback. That was your entry. Maybe we're just going to run it back turbo from here, right? This, because of the way that this is shaped up recently, this is not really enough to want to convince me. Please understand that we're talking about 15-minute time frames. So it's not the end of the world if I sit here and wait for the 15-minute candles to start to form something a little bit more along these lines, as I often draw them out in rough draft, right? In theory, when we talk about hypothetical setups, it's not the end of the world if I start to wait for a little bit more of like a cohesive shift in the trend, right? And I can visibly see that, yes, the trend is shifting. We are clearly reclaiming this little local range, right? Which implies that we're going to at least get to the range highs, but really, what is the higher time frame context? Uptrend, 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 uptrend across the board. So why wouldn't we just continue uptrending? See how we break that down? Hey, we have a thought. Maybe we want to bid 4-hour 200s, right, along this support level. Is it going to get there? Maybe not, because we have to break below this trend and this support level in order to get here. So now I have an option on the table. Do I want to bid the local trend or do I want to keep opting for the higher time frame trend? Right? We have options on the table. I don't want to bid the hourly 200s. I'm going to wait for a reclaim of the parabolic trend and re-entry of the range, and then from there I'll get a trigger and I can say, you know what? I should have bid the hourly 200s. I should cancel these bids. Maybe I need to go from here and look at backtest it. Backtest that theory. What would that have created for you? Oh, here it gives you a lower high. We start to form a range, and then guess what? At some point you do get your higher time frame pullback. But the time prior to that, this was your reward. The time prior to that, this was your reward. So backtest that theory. Are these thoughts valid? Yes, they are. They absolutely are. So is that an implementation that you can go and apply? Absolutely. I don't see why not. You have to be able to accept the pros and the cons along with that. If you're going to bid the 15-minute 200 MAs reclaim here, beautiful, here's your reward, right? Or really, let's use this example. You're going to bid 15-minute 200 MAs reclaim here, beautiful, because look at your reward. right? Pretty damn good. I don't think anybody's complaining about a hypothetical, even if we hid exactly below that stop loss. I don't think anybody's complaining about a 6R trade. So yeah, beautiful, very well done, right? But you go and implement the exact same interpretation, the exact same concept right here, right now. You maybe don't even walk out with money. I would think that you would do. You do. But you maybe don't even walk out with profit after it's all said and done. I would think that you would. But again, we're talking hypotheticals, right? Because the market starts to chop up. So look at your pros, look at your cons. You understand the risk you're taking. You have options available to you. You know your trend trading system. You know when you want to call this a reclaim versus when it's still a little bit shaky to you based on the way that it's kind of unfolded. You know how you want to operate. And then you can go from there. So on one chart, guys, on one chart, on Jupiter, a coin that we haven't even talked about in months, I just gave you, what, 3 different potential setups? Think about how many setups are out there in the market right now. And then yet I have the complaint of, oh, I feel underexposed. There's not enough opportunity in the market. What if I miss out? We just talked about 3 different setups on one coin at one specific time. So thank you for pointing this out. We'll move on. We'll go to Radium. I'm sure it's much of the same. So this is Ray USDT. I'm sure it looks pretty damn similar because that Jupiter chart looks pretty damn similar, all things considered, to the Solana chart that I actually did trade. So Radium looks pretty damn similar. The context here is that we're breaking out of a key level on a very, very high time frame. We already expanded away from a multi-month long range. So this is more of a trendier asset than something like Jupiter, right? Which is still sitting in relatively a 7-month long fair value zone. Don't hyperfixate on these levels. They were not all drawn the way that I wanted them drawn, okay? So this is the way that I really would draw the levels here, more or less. And with this one, yeah, we can leave that there. I don't really see anything wrong with that. Actually, we might pull it down a little bit. Do that. So that's the way that I'm adjusting my levels, right? It's the beauty of hindsight. But this is a trendier asset. So we broke away from a multi-month long range. We're expanding away. We're uptrending on all time frames. So it's the same premise. It's just that it might not be as jumbled, right? Maybe 15-minute 200s aren't within the same general region as our hourly 200s the way that it is on Jupiter. Maybe it's actually more reminiscent of a proper snowball and then bigger snowball and then body of a snowman and then snowman, right? Maybe that kind of thing. So when we talk about parabolic trend portrayal, it might be all the way up here with current price, whereas local trend might still be lagging behind all the way down here, whereas high time frame trend might still be even further below, that. So let's talk about it. What is the high time frame trend? I'm going to say 4-hour 200 moving averages. So 4-hour 200s are actually, I might have lied to you guys, actually. 4-hour 200s are actually all the way up here. So that means that they are confluent with the very high time frame resistance level that we're hopefully going to flip into support so that we can continue expanding upwards. And it's also confluent with, at the time, or at current prices, the most recent high time frame, because this is a 2-week range, right? Doesn't really look like it, but it's about a 2-week range, more or less. Consolidation level. So if we flip that region to support and we have high time frame trend as confluence, and that's a pretty, straightforward inflection point for that, specific time frame. We can scale assumptions thereafter. So the key region, we want to watch that key region. We want to see what happens. In the meantime, you have some kind of a local trend that is held up well. We might be able to say hourly 200s, currently getting chopped up. So we can say this is a little bit choppy, is starting to form a little bit more of a range. And then we have that parabolic trend, whatever that is, maybe 15-minute. This price action is actually not that clean, I can't lie to you. Unless we're talking about high time frame trends on 4-hour. But more or less, same premise, right? This might even be like something even more obscure, like 10-minute. Very, very obscure, but you get the idea, right? You want to stop using trend analysis in a market that isn't trending. I would hope that after getting chopped up once or twice, you turn your brain off and say, okay, you know what? This might be more of a range. When we break out, then I will go and implement that trend style analysis on this time frame once again, and then that's when we actually continue trending. So it's more or less a little bit of that on the local scale, because hourly 200s are getting chopped up. Right? So maybe now we're starting to form a little bit of a consolidation here, perhaps. And then if we pull back into these range lows, that is, 1, it's range lows. 2, it might be the flip of this massive level that I have drawn. Right? And then in a more local scale, even though it's still pretty high time frame, 2-week range, right? It's not nothing. We also have, it was previously range highs, and we have high time frame trend confluence. So that is really the setup that I would be looking at here. In this case, something that looks relatively along those lines. That's not to say that a parabolic trend setup is not valid. It's just the way that this is shaped up that is going to be primarily my focus. So, again, you understand the validity of all these different concepts. You understand how to apply them, I would think, right? Maybe stop using 10-minute or 15-minute 200s when this is the result that you've consistently been given as a result of using them. Maybe divert and say, oh, we might be trading in a range for all of, damn near 2 weeks. And then only after we break out of this range can we then start to apply our 10-minute 200 MAs parabolic trend analysis once again. So you got to use your discretion, of course. That is always the case. But this is how I personally would use mine. I would throw all this into the garbage and just say, hey, because this is a pleasant surprise, because 4-hour 200s are actually drawn up way closer to local price action than I thought they were going to be, why not just look to play those, right? That's what I would kind of divert to. So that's just me. That's my personal opinion, but that is my opinion.
Thanks, Merc. Take care.
Of course. You as well, man. Let's see. Could you look at WIF, please? Started flying because Coinbase listing. Yeah. So again, only way you're going to be trading these, parabolic trends, right? We did take a look at WIF. I left it off the watch list because it's such a choppy chart. I really didn't like any of the setups. If Bonk was choppy to me, and Bonk looks better than WIF in my humble opinion, it's not better because it's more bullish. It just looks cleaner. I would hope that everybody understands what I mean by that. It looks cleaner to me. My puny little brain says, oh, Bonk is, wow, I actually understand what's happening a little bit more than I do on WIF, right? That's just me, though. So for WIF, I would say more or less high time frame trend is 2-hour 200s, in which case, yeah, it didn't really give you much to go off of before it just immediately went parabolic, right? You had to really hone in on this price action and say, that's the reclaim, right? It's go time. Hide stop below previous structure, target continuation. Which is the same philosophy that we had on Pepe. That setup never triggered. We never pulled back deep enough to trigger that idea. The same philosophy that we had on Bonk. I overthought it, right? I have all my excuses, all my regrets, whatever you want to call them. I had the same setup on Bonk, same implementation. And I was like, man, this contextually is kind of weird. I'm not as confident, but I do see the potential. For WIF, I can't tell you that I would honestly catch this. I really can't. That's just me being transparent. But the only way you could have caught this is if you were honed in on this price action. However, I do think that means if you were honed in on this price action and you were willing to call this continuation, you also called this continuation, which is fine because they both honestly look like continuation to me. But just know with every single adaptation, with every single decision, with every single pro, there's always a con, right? So the person that calls this a reclaim also calls this a reclaim. You get stopped out here, but yet that philosophy works the next time. This is markets. You're going to give the same input, and because of variance, you might get a different result, right? You might get a different output. So you just have to get comfortable with that idea. It's going to happen. But for WIF, we did test what is, I'm going to say, the all-time high supply zone. So if we break above this level, I really don't see what's stopping us from making new all-time highs again. There is no resistance in this region. The resistance is right here because we've tested it several times. This level has been drawn, as you can see, and more or less, yes, we had some overthrow, but we are respecting this level. Granted, we had a ton of velocity, a ton of momentum, I'm sure, into that level, so it makes sense that we did get that overthrow. But more or less, it does seem like sellers are stepping in and saying, okay, wait, hold on. You guys might be getting ahead of yourselves, maybe on at least a 5-minute time frame, right? You can't just blow past this all-time high supply zone yet, right? If the assumption is we are going to blow past this all-time high supply zone, Mercury, you're not bullish enough on WIF is going to get added to Robinhood, right? And that's going to be a bullish catalyst, whatever your thesis is. It still has a hat, right? That's your thesis? Okay, cool. Maybe you think that for whatever reason, technically, fundamentally, just arbitrarily, whatever, your thoughts are, we're going to blow past this supply zone. What is a way to take that thought and mold it into something real, into something tangible that you can justify your risk? You can say, hey, brain and gut, here's why we're doing this, right? Hey, gut, here's why I am executing on your gut feeling that we're not bullish enough on WIF, and that Robinhood is going to list WIF next, and blah, 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 and blah, blah, blah. And yes, it still has a hat on, right? Here's why. Let's zoom in. Let's find a parabolic trend. It's not even the 5-minute time frame, right? That's how parabolic it is. So it was the 5-minute 200s in trending regimes, right? And that trend upwards. Oh, that's the breakdown. Oh my God, wait, hold on. We might continue that parabolic trend. Oh, never mind, just kidding. We broke down. Maybe we're forming a range here. Whatever happens from that range, then we can start to look to implement trend style analysis once again, right? And then same exact thing. Oh, yeah, 5-minute 200s. Yep, look for continuation. Oh, that sucks. Ah, man, we're really chopping up now. Maybe after that range, notice that we're so fucking parabolic now because of what is mostly a catalyst. We're so parabolic now that the parabolic trend portrayal is not even the 5-minute. You zoomed in as a way of adapting to the volatility, and kudos to you because you're doing the right thing, because it would have worked, right? Sure, you get chopped up here, but again, for every loss that you take there, it works here. That's a 3R trade. This is a 6R trade, and you lost 1, you lost 2, or right? So you're down 2. So overall, you're up 7. So you're winning. You are doing well. You adapted to the volatility. You took the not financial advice, right? Literally. And you said, all right, let me zoom into the 5-minute time frame. Let me go take scalp trades along there. And it's working. It's winning philosophy. It should work long term, right? Over the course of 4 or 5 sample sizes. Yeah, it should work. It should benefit you. It's not working anymore. We're so extreme that even the 5-minute chart is not showing you what the hell is happening on WIF. Now you have to go to 1 minute. And if these ever load. There we go, right? Now it's 1-minute 200s are the parabolic trend on WIF. So if you're gonna bet on, this just sounds absolutely absurd. If you're gonna bet on an all-time high breakout from here, 1-minute 200 moving averages are the trend to use as a reference to assume that breakout. Fucking ridiculous, right? Hey, by the way, this is why you joined crypto. Right? That's why I joined. Haven't caught WIF. Didn't trade it. This is why I joined. Because we can sit here and talk about a breakout of a new all-time high supply zone, and a 1-minute 200 MA's trend has accounted for 57% of rallying. Oh, and prior to that, it was 5-minute 200s, and that caught all in all, right, over the course of, 5 sample sizes. Sure, we got stopped out here, we got stopped out there, but overall, we captured 7R in the course of a 60% move, right? That's why I'm here. So that's my analysis for WIF. Is it pretty? No. Am I going to trade it? Fuck no. But that's my analysis, right? That's how you take the system that Mercury often implements on the 4-hour chart using daily market structure, and you whittle it down to a 1-minute time frame. Again, I'm comfy. I feel good. I'm exposed the way that I want to be exposed. I have been for 2 months. Computer Brain has been asking me every other stream, hey, did you do anything? Did you take a bunch of profit? You know, have you closed positions? Like, what's happening? What are you doing? I'm like, you know, I'm micromanaging trades, but I'm really not managing trades. Like, I'm not doing much. I positioned a month ago, and you know, the trend is trending, so I'm not going to overcomplicate it. I'm going to zoom out. I'm going to think bigger. I'm going to account for, you know, this trend, this idea, this blah blah blah. I'm going to let it do its thing. So I don't feel as though I need to go capture the 1 minute 200 MA's trend on whiff. I haven't felt that way, and I don't feel that way today either. So, is it a valid idea? Sure, absolutely. We just talked about why it is. Is there one prior to this? No. Well, it wasn't that context, right? This seems to be the issue that most people are having, is adapting to the volatility of the chart. I hate to say this because it seems like a smack in the face and I'm rubbing salt in the wound, but you often... So here's how you know I'm being fair, right? When we do our Friday altcoin watch lists and I say, oh, yeah, whiff is technically an outperformer, but I can't trade it. So in this position, Trader Mercury with his pansy little risk-averse 4-hour 200s, right? He likes to be patient. He likes to be disciplined. Let's not overcomplicate it. I'm not going skydiving. I hate roller coasters. Yeah, Mercury is not going to be trading the 1 minute, the 5 minute time frame. So in this case, guys, I am either trading the 1 minute and 5 minute time frame and thriving with my 32-ounce cup of coffee and staring at the 1 minute chart for 8 to 12 hours a day, or I am basking in the glory of having positioned on whiff on a high time frame perspective prior to the parabola occurring. Right? Do I not say that every Friday stream? Literally every Friday stream. Every Friday stream. Hey, I'm either basking in the glory of having pre-positioned prior to this move, or I'm the scalp trader with my 32-ounce cup of coffee that's staring at the screen for 8 to 12 hours a day, trading the 5 minute chart. Guess what? I am never the person that is with their 32-ounce cup of coffee staring at the 5 minute chart. That's not me. That's not who I am. I tend to do worse, actually, when I try and partake in that behavior. But I am basking in the glory of being pre-positioned, right? Like, that's my approach to the market. That does not mean that needs to be yours. That's the point. There's a reason why Edmund, who's in this stream right now, the same way that they have been for the past 5 years, continues to show up to these streams even though they trade low time frames, even though they would classify themselves as a scalp trader. Why are they zooming in? Mercury doesn't take 5 minute 200 MA setups. What the hell? What's the point? Why watch the streams then? You got to ask Edmund. Why have you showed up every day 5 years straight? Not missed a single stream, guys. Watched every single one live 5 years straight. All right. Tranquility says, hello, what percent away from moving averages you call it reclaim/loss? I mean, after a huge rally, when we, for the first time, lose 4-hour 200s, when you see, for example, the first 5 candles below moving averages, you cut your position. I'm going to answer your question. I'm not trying to be a smartass here. I really am not. But I'm going to answer your question in the most straightforward way and the only way I know how. It's a loss of a trend when it looks like a loss of a trend to you. That's how I define that, right? And it makes sense when you think about it that way because it's discretion, right? You have to call it a loss of a trend. It might be, hey, we closed this hourly candlestick below the chart, but then Mercury might say, oh, that doesn't look like a trend loss to me. But then someone else might say, no, that is a trend loss, right? But then 4-hour 200s can look like this, right? And then we use them generally. So 4-hour 200s look like this, and the trend or the actual price action looks like this. And I'm like, oh, you know, that's not a trend loss just yet. I need a little bit more than to be able to call that a trend loss. I need to see it a little bit more. Versus, oh, I'm seeing this. Yeah, that looks more like a trend loss to me, right? This price action specifically this, but obviously this as a whole, yeah, that looks like a trend loss to me, right? I can call it that. And then I can take comfort in the way that I'm executing because that's how I see it. And it's not that I read a textbook and the textbook Investopedia, right? Investopedia said, hey, 4-hour candle close below 4-hour 200 EMA invalidates your 4-hour 200 EMA's trend setup, right? No, that's not how that worked, right? It might be for some of you, maybe that's how that works, but that's not how it works for me. It's not, hey, after we've closed this amount of candles. It's not, hey, once we're trading this amount away from the trend, then it's clearly a trend loss. It's neither of those two things. It is when it looks like a breakdown, I call it a breakdown. If it doesn't look like a breakdown yet, I don't call it a breakdown. It's the same reason as to why some of the traders in here can say, oh, Solana breaking down below 4-hour 200s. What breakdown? When we're referring to this test. I come in and say, what breakdown? What are you talking about? And in the same sentence, I also go on to say, yeah, even if Solana did this, even if it got lower, even if it did this, I still would not have seen it as a breakdown. Even if we close this 4-hour candlestick below and the consecutive 4-hour candlestick after around the same price, I still would not have called it a breakdown. But Mercury, why do you not see that as a breakdown? For the same reason as to why I don't see this as a breakout. I don't see this as a breakout. I don't see this as a breakout. Right? That's why. I don't see this as a breakout. You go back to watch that stream. We didn't call it a breakout. We said, oh, it's a local trend reclaim because this is what the local trend looks like more or less. Right? Something along those lines. Actually, it probably looks more like this. So it doesn't look like a high time frame trend breakout or breakdown to me. Why? Because it doesn't look that way to me. It's not that, oh, we're trading 0.5% below, and oh, now we're trading 3% below. Or, oh, we closed 4 consecutive 4-hour candles. No, it's not any of that. It's just, if it looks like a breakdown to me, it looks like a breakdown. If it doesn't, it doesn't. The way that I account for my discretion is I contextualize it. In this case, the 4-hour 200 MA setup, what am I playing? If I'm playing 4-hour 200s, I'm not just playing a 4-hour 200 MA's trend, which, by the way, at that time is a 46-day long trend. Do I want to try and call the Pico bottom within negative 2% on a trend that has trended 46 days in a row? Probably not, right? I probably don't want to do that. That is probably me trying to pull a fast one on the market and get cute, right? Do I want to call the Pico bottom within negative 2% of the breakout, the expansive trending move upwards after having expanded away from a 78-day long range? I'm going to call the Pico bottom within negative 2% of that, right? No, probably not, right? When I'm trading and I'm scaling my assumptions, right? When I'm doing that to try and play the forthcoming, right? Hopefully, in my case, hopefully breakout of an 8-month-long range. Am I going to change the way that I'm positioned for the next 8 months, right? Proportionally directional. So we can say multi-month-long trend as a result of breaking out below, above an 8-month-long range, right? Am I going to change the way that I'm positioned for the next 3 months based off of negative 2% of price movement? Hey, we were above the 4-hour 200s, and now we're trading negative 1% below them. Now we're not above them. Now we're below them. So, yeah, your thesis 3 months from now, not valid. Negative 1% of price action dictated that. What? What are we talking? We're breaking out of a 3-month-long range. We're sustaining a month-and-a-half long rally. Like, what are we talking about here? What? So even if it closed 4-hour candlesticks below, I would still come in and say, yeah, that doesn't look like a breakdown to me. When we are bearish retesting the 4-hour 200 MAs here, yeah, sure, yeah, we're reclaiming the 4-hour 200s, but literally 3% higher is a range high, right? Is a massive resistance level. At that point, why not just wait for the price action that looks like this to then say, oh, yep, that's a reclaim, that's a breakout? Is that 3% going to make or break you? Oh, you're a shitty trader because you missed out on that 3% move on Solana, right? You could have gotten a better entry by 3%. No, nobody cares. So why not give it the grace? Why not continue calling it whatever it is by default? Give it a little bit of wiggle room. Give it some grace. Give it some time to do its thing. Respect it. And then if it's clear, oh yeah, there's no way. You know what? Yeah, I can't continue calling. That's not a bearish retest. It's not a bearish retest. This is clearly more along the lines of a breakout than this or that or that or that or that. Yeah, it's pretty obvious at that point. And you think, oh my god, but the trend has left me at that point. Yeah, you know what? It did. In that context, it did. And then here's your local trend retest so that you can comfortably position before the next rally higher so that we can continue into range highs. There is always another opportunity. So there's no need to freak out over, what if this is a breakdown and I don't know it yet? What if this is a reclaim and I don't know it yet? What if I'm slow to adapt? There's going to be a million more opportunities. Did you see when we looked at the Jupiter chart? We talked about Jupiter, a coin that we haven't even discussed ever in at least 3 or 4 months. And we drew out 3 hypothetical setups that are all valid on Jupiter. Yeah, there's going to be ample, opportunities. There's going to be ample trades. Every single day I pass up on 100 or 500 or 1,000 setups that I'm just not even seeing because they're not relevant to me. They have no merit in my portfolio or in my exposure at that time, right? I'm cherry picking every single day. I go take a trade, that means that I neglected 900 other trades to take this one, right? That's how abundant markets are. So I'm allowing myself the grace to see things the way that I see them. It's not dictated by a candlestick. It's not dictated by, oh, we're 4% higher than the 4-hour 200 EMA, Mercury. You have to call this a breakout now. No, I don't, because contextually, we're still at a massive resistance level. It's probably in my best interest. I can't speak for you. I don't know how you're positioned. I don't know what you feel towards Solana. It's in my best interest to continue calling this a bearish retest until it is obvious to me that it is no longer a bearish retest. Had we done this, you'd call me an idiot. But because instead we did this, you're like, oh my god, Mercury's a genius. I wish that I had his discretionary adaptation for the way that he views his charts and markets and blah, blah, blah. I wish I drew great boxes the way that he did. But you're the same trader that would have called it a breakout here and gotten it wrong. And you also called it a breakout here, and that time you got it right. So does it matter if you see a duck or if you see a rabbit? I hope you understand the illusion that I'm referring to. If you don't know, look up rabbit duck illusion on Google. And you tell me, do you see a rabbit or do you see a duck? Guess what? It doesn't fucking matter what you see, because whatever you see, you have a way of justifying it. You have a way of rationalizing it. Oh, I see the duck because here's the beak and here's the back of the head and here's the eye. Oh, I see the rabbit because this is the ears and then this is the mouth and then here's the back of the head. Oh, look at that. So long term, you're going to be just fine. It doesn't matter whether you're closing off of, this way or that way, or if you drew your gray box this way or you drew a gray box that way. You just see things however you see things, and you take comfort in being able to rationalize, send that signal from brain to gut. Hey brain, hey gut, here's why we see this way, and here's why we're pressing the button the way that we are. And that concept, whether it be rabbit or duck, that concept is made out of concrete. It's a solid foundation. It's tried and true. And it's rational, and it's level-headed. And it's going to win long term. It's not going to matter whether you see a rabbit or whether you see a duck. It's not going to matter how your discretionary interpretation, whatever your gut feeling is. And guess what? It's not a gut feeling because I can replicate it. It's consistent. It's not, oh, Mercury, you didn't call this a breakdown, but you called this a breakdown. That doesn't make any sense. They're the same thing. They look the same. They're exactly copy and paste. it's not that. In my head, it all makes sense. Maybe it comes off as madness to you guys. Maybe. I don't know. I would hope not. But maybe it does. But just know, in my head, the shit makes sense. It's repeatable. It's consistent. It's every single time I look at it this way. This is what I want to see. And it's scaled to the time frame of which we're discussing. In this case, it's 4-hour 200s and a month-long rally and a 3-month-long range breakout. Yeah, I'm probably not going to change my bias off of a negative 2% move, right? But if I'm trading the 5-minute chart, I don't have the luxury of waiting for a negative 2% move to then say, oh yeah, maybe I'm invalidated. Because maybe negative 2% is 2R loss for me, right? Because I'm trading the 5-minute chart. So I don't have the luxury of giving it greater space and wiggle room. So it's always consistent. I see things the way that I see things. I draw my gray boxes the way that I draw my gray boxes. It's consistent across the board. It's not just like, oh, I'm throwing random darts, at the chart. And I'm just like, oh, maybe a gray box here, but then maybe, straight across here, and then maybe one there, and maybe one there, and maybe one there, and maybe there, and maybe there, and maybe there. No, it's like, hey, I do it this way. This is what I see. I'm repeating that. The same way that I can justify to myself, not to you guys. I don't care what you think about how I see things, but I care about how I see things, right? I can justify, hey, I'm seeing this. This looks like a breakdown. We're losing this key level. I'm scaling it to the relevant time frame of which I'm trading. So if I'm trading the 5-minute, I'm not leaving negative 10% of wiggle room. But if I'm trading the weekly, I'm probably not changing my bias on every negative 2% move, right? So I'm scaled proportionally to what the hell I'm trading, and I'm also contextualizing it. I'm breaking it down. It's not just moving averages. Moving averages do nothing for me. Do you understand that? They don't do shit for me. Hey, Mercury, what's happening on this chart? Hey, Mercury, what are we doing here? We're uptrending. Hey, Mercury, what are we doing here? We're going sideways. Hey, Mercury, what are we doing here? We're downtrending. It's not like I was unable to tell you, oh yeah, by the way, I don't know what we're doing here. I have no clue. I don't know what happens next. I have no inclination as to what the perceived probabilities are. Oh yeah, I don't know what's happening here. Oh, I don't know what's happening here. Oh, I don't know what's happening here. Oh, 4-hour 200s moved on or turned on. Oh, look at that. Now I know what's happening. Wow, pretty little green and blue line. Wow, now I understand. Now I get it. Now I see it. They don't do shit for me. People see the moving averages. They think that that's the foundation to my system. It's not. It's market structure. It's very general. Which way are we headed? Oh, we're headed to the top right corner. Up, we're headed to the bottom right corner. Up, we're kind of going sideways, aren't we? That's the foundation to the system. So by that theory, or by that idea, that means that generally, at any given time, I understand what's happening on the chart. The moving averages, right? I understood what was happening. Now I have a way of portraying it. That's all it does. It doesn't do anything more. That's all it is. That's all it will ever be. So it's not, oh my God, we lost this and we're trading negative 2% below it. So every time we trade negative 2% below 4-hour 200s, always close it. Nope, that's not how that works. Nope, it's not as static. It's not as straightforward of a rule. Just do this every single time. You'll always be okay. Just always wait for 10 4-hour candlesticks to close and then cut the position and then you're good. Well, guess what? If you wait for 10 4-hour candlesticks here, well, yeah, that works out very nicely for you. Don't worry about it. You're good. You cut at the right time and you avoid a negative 30% drawdown. You wait for 10 4-hour candlesticks here. By the time you cut, we're trading all the way down here. So there's no hard set, straightforward rule. Hey, every time this, always do this. In discretionary trading, you have to use, can I get a drum roll? Whoops. Can I get a drum roll, please? Your discretion. You have to use your discretion. There's no other way around it. So use your discretion. Over time, through experience, you understand how you like to think. And then you can back it up because you'll have a resume. Hey, I've done this long. Hey, I do this. Hey, I see things this way. And here are my results. Let's continue seeing things this way. Let's continue with the plan A, plan B, plan A part 2. Let's continue using trend adaptations. Let's continue interpreting market structure the way that I do. Let's continue drawing gray boxes the way that I do. That's the premise. Hey, Merc, could you take a look at ENA, please? The 15-minute time frame was quite clean, but has been choppy now. Traded at the last tap of 15-minute, and it broke down since then. Looking for your thoughts and learning from it. Was I too aggressive? Didn't really consider high time frame, as 15 minutes seemed clean. All right. Give you my honest thoughts. Mm-mm-mm. 15-minute was clean. I agree with you there. And now it's choppy. I also agree with you there. You traded the last tap of 15-minute 200s, which broke down. And you're just trying to figure out, were you too aggressive? You have to answer, were you too aggressive? Did you over position size? Are you going to fall asleep tonight thinking about the 15-minute 200 Amaze ENA trade that got stopped out? Because if yes, yeah, you were too aggressive, right? Do you see what I mean? You decide whether or not you're too aggressive. Did you say, oh my God, ENA is clearly going 100% higher from here, right? Why not buy 15-minute 200s and allocate 30% of my portfolio to 15-minute 200s? Clearly, it's going to go so much higher. And you got stopped out on that position, and now you're down negative 4% of your entire portfolio. So now when you go to sleep tonight, you're going to be like, oh man, I took such a heavy loss on ENA. That fucking stupid 15-minute 200s, stupid variance, stupid markets, stupid universe always out to get me. If that's how you're feeling afterwards, yeah, you're being way too aggressive. If it's well, that sucks. It was worth the gamble. I can still justify the risks that I took, but you know, obviously I hate losing. We all do, right? But I can still justify it. It is what it is. No big deal. Then no, I don't see any issue with this. Here's the thing. You're gonna take quote unquote good trades that get stopped out. The dangerous part about trading is you're going to do stupid shit that makes you money. I'm not kidding you. I had a friend of mine who texted me 3 days ago and said, I just aped into Doge. And they were up like $2,000, and that's a ton of money for them, right? And they're like, oh my God, I'm so euphoric. I know that crypto's your thing. I have to show you this win. Look at, I just aped into Doge and it's up 20%, and you know, 10K is a lot of money for me. I really don't have that big of a portfolio, but I position size $10,000 because, oh, I don't know, Dogecoin looked good. It was right here and it looked like it was going to go higher, and then it went so much higher. It's up 20% since then. I'm up $2,000. Look at me. It's stupid, because when does the market look the most bullish? When is that same person going to have the same thought? I should buy Dogecoin here. It looks like it's about to break out another 50% higher. What ends up happening? Yeah, you made $2,000 from this pump, but that sucks because now you're allocated $12,000, and yeah, here's your reward, right? You gave it all back and then some. Sorry, right? So you're gonna do winning behaviors that don't win, and then you're gonna do losing behaviors that win. That's the scary fucking part about markets. Especially in a bull market, losers win for quite a long time before they have to realize that they are losers. I tell you guys the story about the person in the last bull market who was very aggressive and very, like, you know, smart alecky and towards me. He came into crypto in 2021, bought Doge with like $10,000. And then Doge goes on this like 600x rally or something stupid. They turned $10,000 into 1.1 or 1.2 million dollars in the span of like 4 or 5 months, right? I'm not kidding you. This is a real thing that happened. This person went to high school with me. They texted me and said, and showed me their P&L on Robinhood and said, I'm up $1 million and I just started trading 4 months ago. You've been doing this for years, and you consider yourself a professional. don't you feel like, I kind of outperformed you, right? Doesn't that make you feel shitty? Like, ask me what that person's doing today. They're working their 9 to 5 job and they haven't changed their life at all because the $1.2 million that they had, they didn't lock in enough of it. They have the same fucking regret as literally every single other crypto trader to ever trade crypto. Oh, I didn't keep enough of what I made. Oh, I had 1.2 million and now I have to live with the trauma for the rest of my life that I turned 1.2 million into only 30,000. My life did not change. I'm still working my job. It's as if I got a really nice raise or a bonus, and that's all that happened. Oh, and now I'm so damn traumatized, I will never trade markets ever again. I've now cut myself off to all opportunity for the rest of my life. Oh, wow, that's great. It's losing behavior. You're going to get lulled or attracted to doing losing habits because in bull markets, losing behavior goes unpunished longer. Do not think that it just goes unpunished. If you think that it goes unpunished entirely, you are succumbing to the same fate as every single other fucking pleb that has ever traded crypto and has nothing to show for it. I need you to understand something. So, all this to say, Aqua G, kudos to you for taking a 15-minute 200 MA trade setup. The same trade setup that if had you implemented, bad luck, unfortunate, whatever the hell you want to call it, right? Had you implemented it here, very nice, you make money. You implement it here, very nice, you make money. Implement it here, very nice, make money, make money, make money, make money. It works until it doesn't. It happens. You come in to take a trend trade the 7th time around, and of course, woe you, that's the time the trend breaks down. That doesn't mean that it was a bad setup. What I want you to think about, Aqua G, specifically, what I want you to think about is context. We're coming off of a daily resistance level. Is this 15-minute 200 MA's trade setup the same setup as the one prior when we're having momentum into that level, as opposed to ping pong, right? We're coming off of that level. Is it the same trade setup? I can't answer that for you. I cannot answer that for you. But you see how we contextualized it? At least now, maybe we are mitigating the amount of times where we do find ourselves getting stopped out on the 7th test of the trend. There's a pro and a con here too. You opt to neglect the 7th test of 15-minute 200s. Yeah, of course, that's the time, whoa, you, the universe hates you, right? That's the time it goes up 300% from that 15-minute 200 MA's test. All you had to do was buy it the 7th time around. At the same time, maybe we're refraining from that specific trend retest getting stopped out because we've been able to contextualize it. Hey, we're coming off of a resistance level as opposed to we have momentum going this direction going into that resistance level. I don't know, Aqua G. It would skew my brain. It would. But I don't know. Maybe, just maybe, that context changes this setup just a little bit, right? It's not, at the core, it is the same setup. It's the same. Why not just buy the trend the 7th time around? Yeah, why not? You're absolutely right. But at the same time, it's a little bit different, right? Just a little bit. The context behind it, the nuances, it's just slightly different this time. And then as a result, maybe we get a slightly different outcome. Chop instead of trend continuation. So that's what I want you to think about. Specifically to you, Aqua G, and anyone else who's having this issue, right? Make sure that you're contextualizing things. You want to see the bigger picture as well, right? And that goes in more ways than just, oh, we're uptrending on all time frames, so why not be a degenerate and always just buy every single test of 15-minute 200? You don't have to do that, especially if you are not in the luxurious position where you already have a bag of ENA, and it's not going to hurt you to buy the 15-minute 200s because you already bought, during the range, or you've already traded the 15-minute 200s 4 times on the way into this one. You're up 18R, so what's the point of losing your mind over maybe being only up 17, right? Well, that's different. I think that you can mostly neglect the stupid context that we just added. Oh, we're coming off a resistance level instead of into it, right? You can neglect that and say, oh, why not just do what's been working, right? Why not just, if it ain't broke, don't fix it. You can keep going with that. But again, variance. We're all different people. I'm not going to sit here and manage your positions. You're not going to manage mine. You don't know my background. I don't know yours. We live in different areas. We, grew up in different aspects. We have different portfolios. We have different risk tolerance. We're different people, so it's going to differ. But it's just something to think about, Aquaji. Okay? Now to everyone else, or to everyone, the general message. The going back to winning behaviors can lose, whilst losing behaviors can win. And in bull markets, losing behaviors win for longer before they get punished. That does not mean they go unpunished. They do get punished. Look at this chart. Look at this chart. And I want you to point out what you think is the greatest liquidation cascade in crypto history. What do you think it is, right? My brain immediately this. But if not that, maybe this. But if not that, maybe this. But if not that, maybe either one of these or maybe that one, or I don't even know. That one's pretty gnarly, right? That's like a negative 30% daily candlestick, actually. Maybe the FTX capitulation, right? This is where our brains magnetize to, isn't it? That's what I would think. If I told you, look at this chart, little Timmy, 4-year-old, right? The legend himself. Look at this chart and you tell me, what do you think is the greatest liquidation cascade in crypto history? Our brains immediately go to, oh, wow, yeah, that multi-month long range breakdown, negative 25% move in one daily candlestick. This is negative 50%. What about this, man? That's gnarly. What about March 2020? What about Luna? What about what was the one prior to Luna? I forgot. What about FTX? Oh man, these are pretty gnarly, right? It's this. You can't even fucking see it. This is the greatest liquidation cascade in crypto history. Do you get my point? Can you even see it? I can't fucking see it. Maybe if I take 3 or 4 shots and I squint my eyes and I go get reading glasses and I get a monocle and I zoom the fuck in, maybe I can actually see what liquidated all these plebs before we continued the bull market 8 months later. Maybe I can see it. This is the move that we're talking about. This is the greatest liquidation cascade in crypto history. How? How? Look what leads into that. You're gonna have to fight off the jealousy. You're gonna have to fight off the envy. For years on end, I had a friend, deep friend, who was actually a student to my mentor before I was, right? He was his first student. When I met him here, he had $300,000 to his name, and he had a Tesla fully paid off. He just bought a Tesla somewhere around this region, right? So at this point, we're talking about, we're in 2019, and he is 19 years old, the same way that I am. Actually, he's even a little bit younger than me. And he has $300,000 portfolio, and he has a Tesla that is bought, fully paid off in cash, no car payment, right? So really, he has like a $350,000 net worth at 19 years old, right? Absolutely insane. I remember him saying somewhere around here, hey, I'm going to throw 1 Bitcoin at Doge just to see what happens. Mind you, Doge goes from 0.2 of a penny to 75 cents the next 5 months thereafter. That is a 30,000% move. He looks at me and says, I'm going to throw 1 whole Bitcoin at Doge just to see what happens. This is me venturing off further out into the risk curve. This is my degenerate gamble bag. If I lose $10,000, no big deal, because guess what? $350,000 net worth, right? Fully paid off Tesla. At this point, a year has gone by, ample opportunity. I'm not kidding you. All the way through this year, the next 2 years, I'm being shown $150,000 P&L, $50,000 P&L, $80,000 P&L. Hey, I just put my first 7-figure trade on for the first time ever. This feels pretty good. Oh, by the way, I'm up 80,000 unrealized right now on that position. This is what I'm being shown. When we get to here, I get liquidated on a sub FTX account, 10 grand, right? At this point, a full-fledged bull market has passed us by. I'm absolutely fucking euphoric. Even with a 10 grand liquidation, which by the way, FTX liquidation engine was really fucking cool. I have to give them that. It was, instead of getting liquidated and your account goes to zero, it would leave a little bit. It would leave a little bit of dust. So my 10 grand was actually not zero. It was like 1.3, right? So I'm like, that fucking sucks. I tried to be cute. I tried to be my degenerate, sub account, let me try and run up. And I did. $500 into 10 grand into only 1.3 because I got liquidated. So I go to him and I'm like, damn, man, that fucking sucks, right? Like, yeah, I blew up this little sub FTX account, this little challenge account that I had. That sucks, man. And he's like, yeah, I feel your pain. I got liquidated too. I'm like, what do you mean you got liquidated? He's like, yeah, I lost 50 grand. I'm like, oh, you lost 50 grand. Like, I remember you were telling me you threw 10 grand into Dogecoin right before it rallied 30,000%, right? I remember when I first met you, you said that you had just bought off a Tesla paid in full and that you still had a $300,000 portfolio. Like, I got liquidated 10 grand and I'm not crying about it. I would imagine proportionally, right, to our net worths, you lost 50 grand and you're also not crying about it. So like, haha, you lost 50 grand, right? That's the feeling. We both got liquidated. We can cry about it, laugh about it for all of 5 minutes. And then tomorrow I'm going to come back in and start making money again, right? I'm still up many multiples from where I was, back in 2020 when I was in the deepest, darkest, pits of mentally and also from a portfolio standpoint. Oh yeah, life is great, right? We got liquidated. Haha, haha, hee hee. No, dude, I got liquidated. That 50 grand was everything I had. What? What are you talking about? What do you mean that's all you had? How did you lose? How did you get liquidated 50 grand? That's all you have. You just showed me $150,000 P&L on that Ethereum trade because it rallied 100%. That was 3 weeks ago. What are you talking about? Dude, I'm sick and tired of explaining this. I'm going through a lot right now, and you're not helping. I don't want to explain to you. I lost everything. The whole time, I need you to know. The whole time, I'm sitting there comparing myself to this man. We're both 19. Wow, I wish that I was him. Wow, he put on a 7-figure trade. I have not done that yet. I want to put on 7-figure trades. I want to get $150,000 P&L on one trade. I want to be able to say, oh, 10 grand, fuck off. Here, Dogecoin, 10 grand. Yeah, you can go to zero Doge or you can go 30,000, percent higher. Doesn't matter to me. Wow, I want to be you. Wow, I love Elon. I want a Tesla. I want to have a Tesla paid off in full. I'm tired of having a car payment. The whole time, throughout an entire bull market cycle, I am sitting there comparing myself to this man. Come back here, my account. I'm up several multiples. Yeah, I lost 10 grand in a sub account. No big deal. It is what it is. Ha ha he he, right? No, I lost everything. 50 grand, I lost everything. I have nothing. I have to start from zero all over again. I have nothing to show for the 3 years that I've been trading crypto. What? Excuse me? How? I hope the story resonates with you. I hope it gets an idea across. It is not to sit here and bash this person, because the reality is many of us have been there before, myself included. Granted, I've never been liquidated, but pretty damn close, right? It felt the same. I can guarantee you that. So, it's the premise. Don't sit here and compare yourself to other people. Stay in your own lane. You're gonna get your gains. Whatever is crazy gains to you, you're probably gonna get them. Stay on that path. Be rational. Be patient. Know when to justify risk. Take comfort in that risk, knowing that, yeah, sure, you might see that risk come into fruition, but you might also get rewarded for it. Continue on that. Stay in your own path. Stay in your own lane. Apply rational, level-headed thoughts. Think about your execution to a heavy degree before you press any buttons, right? Hopefully, if you've been doing that throughout the past 8 months, that execution and that thought process is very seamless. We get a news event today and execution is warranted across 7 different trades. Guess what? It takes me all of 2 minutes to do that. 2 minutes, right? It used to be, do I want to do this? Do I want to do this? So much so to the point where I would stall so long that the execution that I needed to take was past me at that point, right? Because 6 hours had gone by and I'm still wondering if I should cut a trade or if I should enter a trade, and it's up 10% or it's down negative 10%, and 6 hours have gone by, right? Now, oh, we got a news event. Oh, I didn't see that coming. Oh, I need to do this, and this. Oh, okay. Execution, 2 minutes. Seamless, right? I know exactly what I want to do. You've been able to do that. Continue doing that. Stay in your own path. Especially, guys, social media. Do not sit here and compare yourself to these way blown out of proportion numbers that you're seeing on social media. Okay? The reality is we live in a digital era, and that's just reality. So it's very, very easy to see someone else's grass and say, wow, that grass looks greener, right? Just water it. Just water your own grass. It'll be greener. Don't worry about it. That's the premise. Okay, was that corny? Absolutely, but it's true. You're so curious what that guy is up to now? I don't know, because I don't talk to him anymore. Part of me hopes he made it all back. Of course, I do too. You have to have risk parameters. You have to follow them. You never know when the next XXS is shooting missiles at. XXX scenario is a black swan. Absolutely. So when your system is tried and true, and when you have the ability to take comfort in your execution and in your abilities, I tell you guys this all the time. I'm probably sounding like a broken record, right? That's a good thing. That means that whatever we're saying is working. But I tell you guys this all the time. Even prior to when we broke out of a bull market or into a bull market, right? Raging bull market. And oh my God, we're making all-time highs. So now it's obvious, right? When it wasn't as obvious, I was sitting here saying, I'm very, very confident in a bull market. I have conviction in that belief. But you know what I really have conviction on? More than anything. More than, hey, we go into a bull market. More than, hey, your greatest opportunity awaits you. More than, hey, think bigger, eventually opportunity will find you. More than, hey, a system that is tried and true, if I respect moving averages, long term I'll do well. More than any of that, you know what I really have confidence in? My abilities. My discretion. My ability to allocate risk reasonably and manage that risk, not oversize, not undersize. My ability to remain disciplined, my ability to accept losses. I am confident in my abilities above all else. So much so to the point where I can come in with this corny ass tagline and say, market exists, I win. I don't need a bull market, guys. I've been doing just fine. The bull market that people complained about and said, hey, this is the worst bull market ever. That one right here. This, greatest 2 years of my life trading. This, greatest 2 months of my life trading. Opportunity, 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 opportunity. Guess what? All you have to do is survive long enough and opportunity will find you because you have that skill set. Don't worry about it. Oh, that variance on that trade setup didn't work? That's fine. It's still long-term winning philosophy. survive long enough to the point where you can apply that trend setup, that trade setup, that thesis, that concept, that idea, and it wins that time. Because guess what? It's probably because it's dictated as winning philosophy. We're not sitting here fucking delusional. It's backtesting and forward testing that has convicted us that that is truly winning philosophy. Because that is winning philosophy, it's going to overcompensate for the times where it didn't work, right? For every single time that we call a range breakout, and it ends up being a deviation, when we call a range breakout here or there, and it works that time, it overcompensates about 10 or 20 times when it didn't. Yeah, it's winning philosophy, right? So maybe the next time that we break out of a multi-month long range, we want to call it a breakout and then trade it as a breakout, right? Why? It's long-term winning philosophy. Oh, and I have the ability to execute off of it. Oh, and even if it didn't work, I have the ability to remain disciplined and cut losses. Oh, and if I win because I win, not because we're in a bull market. With that said, we've been going for 3.5 hours. I don't see any more questions. I'm not going to ask for any more questions. I'm tired. As much as I love you guys, as much as I love markets because I am a nerd, I'm tired. So I'm going to go ahead and log off now. If you're going to ask me for any questions, comments after the fact, I probably won't be here because I do like to take a break away from the screens, especially in bull markets because I'm in my head so much. So you're probably not gonna, see me in chat until maybe tomorrow. You might see me shitpost on crypto Twitter or something along those lines, but very passive approach to the market right now, right? For the sake of my own sanity. So I'm gonna go ahead and log off now. Much love to each and every single one of you. I hope that you're doing well. And more than that, I hope that I have been able to provide some amount of value to you, whether that means bending your mind a little bit to see the bullish arguments at some point in the past few months, or teaching you a system, or guiding you, or answering a specific question that really clicked something for you. I really, really, really fucking hope that you guys are getting value from this, especially in comparison to, I'm not asking anything from you. All I do is I just ask you to trade. You're going to pay those fees anyways. So let's not pretend like I don't profit off of you guys. I do. You pay my bills, but the market and trading it is how I'm changing my life. So there's a very clear discrepancy. Don't get it twisted. I'm so fucking thankful for you guys. I hope that you feel the same way. Not just towards me, but towards the fact that this is the most amazing community that I've ever had the luxury of being a part of. And I'm trying to say that about as unbiasedly as possible, considering it's the community that I built. So that's truly, honestly, how I feel. I hope that you're getting tons and tons of value from this stuff. I hope that you guys are killing it. I wish you nothing but good luck and all the best. So you're all family. You ever need anything, please feel free to reach out. Much love. Take it easy. I will talk to you again on Friday. Peace, everyone.